we're still in a really strong earnings environment for U.S. stocks.
Tech is going to remain well supported.
Really, it's about rebalancing.
The churn is not necessarily detrimental.
Investors are being cautious ahead of the earnings season.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, equity markets sliding. The United States and Iran trading strikes, pushing crude higher as a record drop for SK Hynix is sparking a rout across tech stocks. Investors are facing down a week absolutely packed full with event risk. Bank earnings, CPI, Chair Warsh, just around the corner.
And this morning, really, the event risk is the heightened tension in the region, in the Gulf. What's going on between Tehran and Washington? Continuous strikes over the weekend, tit for tat. They're targeting each other, military installations back and forth. And then you have the Strait of Hormuz, and they don't agree on whether or not it is open or not. Iran's foreign ministry this morning came out with a statement saying the U.S. has, quote, undoubtedly entered a crisis phase, basically saying the MOU is not useful anymore. And right now what you have is some ships getting through. We saw that over the weekend, but in secret, their transponders off. Today, it looked like the Strait of Hormuz is pretty much grounding to a halt.
So here's the move in crude this morning. Bring it up, Brent and WTI. Got a move of about 2 to 3% here. Brent at 77, WTI at 73. Let's take WTI. WTI this morning is $5 above the post-war low. It's $35 below the post-war high. So this is a market that's still discounted a lot of tension in this region. I'd go one step further. There are some guests over the last week that are suggesting this is just the new normal, a messy negotiation punctuated by strikes every other week, and we carry on without a destination in mind.
This is what I hear from a lot of people. We need to get used to this stalemate when potentially there's going to be calm waters for a few weeks and then the strikes start again because talks break down, or you see the IRGC going after the vessels in that U.S. path that hugs the Omani coast. When you have a moment like that, you would arguably think that if prices get higher, that could push the president to maybe want to go back to the negotiating table and have these kind of talks when it comes to nuclear.
And the back and forth continues. I've got no idea if that's the right way of looking at this, but that's the way a lot of people are looking at this. Let's pull up the bond market. 2s, 10s, 30s. Yields higher across the curve just a little bit by a basis point, the very long end of the curve this morning. 30s up by 1 or 2 basis points to 5.07%. This Fed is dealing with some really, really fine margins. And a move in crude can push this story one way or the other. Chair Warsh just around the corner. The final CPI print before the Fed's next meeting just around the corner. Setting the stage for a real debate. Is this meeting live or not?
And how much is that CPI print going to push him in the direction of how he communicates what the Fed should be doing, even though he refuses to offer forward guidance in front of congressmen and women and then senators for the first time ever having this testimony as the Federal Reserve Chair after we get that CPI data? This is going to be an incredibly interesting hearing. And a lot of people say he's just going to say what we have already heard, but he's going to be pushed by these elected officials to give potentially a little bit more guidance than he's been offering us journalists.
Chair Warsh testimony coming up tomorrow in front of the House, the day after in front of the Senate, a few weeks away, the Fed's next meeting. Coming up this hour, we'll catch up with Geoffrey of BNY as tech names lead equities lower. Clayton Seigle of CSIS as the US and Iran clash over Hormuz, and Kunst of Cleo Capital, with a volatile semis trade keeping investors very much on edge. We begin this hour with stocks lower and oil higher. Geoffrey of BNY writing the following: disinflation hopes are still carrying sentiment. Growth, earnings and policy risks are harder to ignore. Jeff joins us now for more. Jeff, welcome, buddy. Let's frame the next 24 hours together and you tell me your priority. We've got earnings, we've got CPI, we've got Chair Kevin Warsh, we've got developments in South Korea and issues through the Strait of Hormuz. Where's your focus this morning?
Well, so all of the above and how that impacts Fed expectations, how that impacts policy expectations, full stop. Everything will be fine as long as there's no major shift higher in inflation and inflation expectations. For now, that remains our base case. And to be frank, don't think anything changes that. We need healthy disinflation at this point. But I agree with what you were saying earlier. What's going on in the Strait right now, it's a new equilibrium. We have to get used to it, not just in the short term, but over the long term.
Well, Jeff, let's turn to 8:30 Eastern time tomorrow morning. CPI drops. If we get an inline CPI, do you think that closes the door to a July rate hike?
I would say the door wasn't really open, maybe ajar in the first place, but clearly yes. And to be frank, I don't think any central bank right now, given the state of demand globally, should be thinking about rate hikes unless there's a serious change in the inflation outlook right now, be it the Strait or otherwise. The US, the Fed is a bit different, where there's more of a demand impulse in the US and you're driven by the capex for the hyperscalers and the like, driven by the AI view that you don't see in Europe. But right now, to be frank, I really don't see a case for hikes anywhere.
Well, you see it in the market, the front end of the curve. Just the market starting to speak to that story, Jeff. The 2-year trading this morning around 421.64. So where are we? Something like 50 basis points above where the policy rate is at the Federal Reserve. Jeff, how do you see that spread closing?
So the spread will close with the CPI print and with Fed Chair Warsh's upcoming guidance. And I think he will need to raise a very high bar for rate hikes. So it may not be the entire view on the FOMC right now, and there's still questions over how much he will be actively disclosed. But the bottom line is, again, given the state of demand, and we keep on drawing comparisons with 2022, this is very different compared to where we are in 2022. So the bar is far higher, and I think he and his peers around the world, especially Madame Lagarde, I might add, need to make that clear. If that is set, then I think all of the hikes that were priced in around February and March and onwards, that should really come down.
Jeff, if you take this view that he's going to potentially be a little bit different than some of the other members and some of his colleagues on the Fed, who else are you looking at in terms of speaking this week? So you have a ton of Fed speak, including Waller and Cook and Jefferson.
So, that's a really good question. All of them, will have their own views on this. But I think there are two things that matter. A, do the individual views of the central bankers matter, and two, how do we find a consensus? There's an article today noting just the Bank of England, which is in a good place, and you've got diverging views across the board in the UK, and that's starting to cause communications issues and market guidance. But at the same time, the Bank of England, taking a leaf from what Fed Chair Bernanke advised, is looking at scenarios. So the Fed perhaps should be looking at scenarios. Maybe that's what the task force will try to elaborate upon as well. So which FOMC member will adapt to which scenario? Where do we set the bar? Let's not look at individual names, but where the data conforms to the scenarios, then we go from there.
Well, traders are almost fully pricing in a hike in September. Do you think they're just getting used to this new normal, what's going on in the Strait of Hormuz?
So I think two aspects there. I think less about the new normal in the Strait of Hormuz. If I had to decompose and just ballpark numbers out the air, probably 20% at most from the Strait of Hormuz and the remaining 80% from the capex trade in the US, from the AI trade, because that's still what, again, is separating the US from the rest of the world. There is genuine growth. But why I mention that 80% number, if 80% of US growth is being generated from the AI view and the relevant investments, then that's what the pricing is. But then we get into an equity story. So if inflation comes off, but because demand is coming off from the AI side, but without anything on the consumer side, the household side, to compensate, then I think that's where we get a few more wobbles. But let's cross that bridge when we get there.
Jeff, there is an inevitable home bias to this conversation sitting here in New York, focused on US events, CPI tomorrow morning, Chair Warsh as well. For the global fixed income market, which market is in the driving seat right now? Is it Washington or the latest in Tokyo, Japan?
So we're trying to get a straight answer out of Tokyo, I guess. And I think what happens in Tokyo will matter for the US Treasury market as well, given not just Japanese holdings, but also broader North Asia holdings. But let's make it clear, what GPIF does, what any one fund in Japan or elsewhere in Asia does is not enough. You need a comprehensive change in behavior. Total Japanese assets are 10 times the level of GPIF. If we get a 10 percentage point or more move in asset allocation there, then that we can start to discuss whether it's a game changer or not, especially if those in Korea, Taiwan and China follow onwards as well. For now, we're just talking about one fund, but I think that discussion is a healthy one. That's what's needed to change behavior to get dollar down against the rest of Asia, because that's desperately needed right now.
Jeff, that discussion is live, so let's have it now. What do you think would change behavior? Regulation or price? And is price right now sufficient to get that money to come home?
Right. It's price. And let me tell you my favorite headline this morning. Tokyo Disneyland is raising prices. Right. Those are the things that people on the ground will feel, and they'll ask, why are they raising prices? Is it because the yen is too weak, or is it other aspects, labour market too tight, a combination? But when you start to feel it in inflation that people look at every day, maybe Tokyo Disney Sea prices will go up as well. That one's even more popular. Then I think there will be pressure on the government to act. We need to get inflation over and beyond a certain level that's tolerable. And then you realize if the weekend is a part of that story, then behavior will start to change on the part of government and associated entities.
Jeff, is the income and yield level available in Japan right now enough, sufficient to offset some of those concerns?
So, right now, probably not. I think international investors are looking at 3-4%. But again, let's go back to real yields, right? So if inflation hovers around 2% or so, and then longer dated bonds, go 3, 4, 5, those kind of levels, you get real yields at a comfortable 2%. Then I think more money stays at home. Then you get international funds going in as well. But as always, given Japan's debt stock, can the government's debt to GDP ratio and funding, financing live with 2% real yields? That's a different situation. But there are trade-offs. And I think right now the trade-off with dollar yen is becoming a bit too hard to ignore. That's a very different question, Jeff. Thank you, sir. Jeff Yu there of BNY. It's a difficult question for the Japanese authorities. Dollar yen around 162 this morning. Can't get away from the 160s, even with the threat of intervention on both the regulatory side and the policy side. Let's turn to equity futures this morning. Equity futures sliding by about 0.25% on the S&P 500. Turbulence in South Korea. We'll spend some time on that. That ripples through global markets. The Nasdaq underperforming so far this morning. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. The US and Iran exchanging fresh strikes over the weekend and issuing conflicting reports on the status of the Strait of Hormuz. Tehran saying the strait is closed, the US saying it's open to all vessels and the military is prepared to ensure freedom of navigation. Shares of SK Hynix tumbling by a record 15% in Seoul. The sell-off sent the Kospi down 9%. SK Hynix's newly listed American depository receipts may be under pressure today after surging 13% in their debut Friday. South Carolina Senator Lindsey Graham died unexpectedly over the weekend at age 71. His death sets up a succession drama in the state less than 4 months before midterm elections. The governor can name a replacement for the remainder of Graham's term, but state election law then calls for a special primary election. And that is your Bloomberg brief. John.
Vonnie, thank you. Thank you very much. What a life that man had. Just reading about in the last 24 hours or so. Lost his parents young, both of them some 15 months apart. Became the legal guardian of his sister. Went on to have a military career, then went on to be the senator in South Carolina. Just an absolutely phenomenal life that man led.
He's dedicated almost his entire life to public service. Air Force, then congressman, then, of course, a senator. Senior voice on foreign policy, which is why there has been a ton of talk about who replaces him and also what kind of void this is going to leave in terms of this was an individual that sometimes was able to speak for the entire Senate to the President of the United States.
We'll spend some time on that dimension in the next 15 minutes or so. Up next on the programme, fighting for Hormuz.
Those boats are coming out of the Hormuz Strait.
We're doing very well with respect to the Hormuz Strait.
Those ships are flowing out of the Hormuz Strait like nobody's ever seen before, actually. The strait is open.
That conversation up next with Clayton Seigle of CSIS, live from New York City this morning. Good morning. Two days of gains on the S&P, 2 weeks of gains dominated by a bounce back in tech. This morning, a bit of a reversal, a bit of a slide. So we're down 0.25% on the S&P, down 1 full percentage point on the Nasdaq. Some real weakness in South Korea on SK Hynix specifically. On the Russell this morning, some relative outperformance in a down market. We're down by 0.1%. Into the bond market, what a 24 rounds we've got coming up for you. Chair Warsh, CPI, bank earnings and more. Yields this morning just a bit higher, up a single basis point on 10s, 457. On 30s, just north of 5% at 5.07%. And setting the tone for the market action, in some places at least, is this move in crude. The bleed higher continues. WTI and Brent up by close to 3% this morning. WTI right there at 73.50 so far today.
Based off the rhetoric you're hearing from both Washington and Tehran, if you are an individual that's in charge of a vessel and you're sailing through the Strait of Hormuz, you don't know what to do. Do you actually go through or not? Tehran's saying it's open, you have to use their strait, but you won't get the protection of the United States. If you go through the United States way, then potentially you have a target on your back from the IRGC. All of this is happening as you make that decision when you have strikes continuing from both sides, the U.S. going after their military installations and vice versa.
It's one of our top stories. Under surveillance this morning, fighting for Hormuz.
The Strait is open.
Those boats are coming out of the Hormuz Strait. We're doing very well with respect to the Hormuz Strait. We have an oil gusher. The Strait is totally open. Those ships are flowing out of the Hormuz Strait like nobody's ever seen before, actually.
So here's the latest this morning. Crude pushing higher as the US and Iran remain at odds over the status of the Strait of Hormuz. The two exchanging fresh strikes overnight following a weekend of fighting. With the latest, Bloomberg's Tyler Kendall has more. Hey, Tyler.
Hey, John. Good morning. Well, this standoff over the Strait only appears to be deepening as the U.S. military confirms it conducted at least 3 waves of strikes over the weekend designed to degrade Iran's ability to attack commercial shippers. The thing is, the threat is still very much there as Iran chose to retaliate by targeting U.S. allies in the region. And we heard from the IRGC declaring that the Strait would remain closed until further notice unless ships get the approval from the Iranian military to cross. Now, CENTCOM is disputing that notion, says the U.S. is working to ensure freedom of navigation, though the satellite imagery is showing us that observable transits have all but ground to a halt, though data analyzed by Bloomberg News shows that so-called dark crossings, when ships transit through with their transponders off, have now exceeded observable transits for the last 3 days in a row. Now, this wave of escalation started in part because Iran has been dismayed by the fact that ships have been using that corridor that hugs the coast of Oman instead of getting closer to the coast of Iran. But, John, we should point out over the weekend, we saw that Iran's foreign minister was in Oman for meetings about the Strait of Hormuz, but there was no sign of U.S. Counterparts taking part in those discussions.
Tyler, as you've seen repeatedly so far this year, Capitol Hill has pushed back against action in Iran. We've just lost a key voice, a key interventionist voice in an increasingly isolationist Republican Party, Senator Lindsey Graham. How will that change the relationship potentially between this White House and that Congress?
It has the potential to really change the relationship, John. I mean, Washington has been absolutely stunned by the passing of Lindsey Graham, who also worked to build those bipartisan ties over his 30 years in Congress, as well as be that close ally of President Trump. But as you're outlining, Lindsey Graham was considered to be a foreign policy hawk in the Senate, perhaps the staunchest supporter of President Trump's policies when it comes to Iran, as well as the staunchest supporter of Ukraine in the Senate. And that's another angle that we should definitely be watching here, considering Graham had just come back from his 10th visit to the country over the weekend. And he had just announced with a group of bipartisan senators that they had gotten White House approval to move forward with this critical sanctions package against Russia. So a lot of different dynamics to watch here, John. Also important to note, he was the chair of the Senate Budget Committee, which has been absolutely instrumental in getting through some of President Trump's top priorities, like the One Big Beautiful Bill, and now the potential that we could see a third reconciliation package is going to hang in the balance.
Tyler Kendall with the latest. Tyler, thank you. Appreciate it. More from Tyler in the next hour. Clayton Seigle of CSIS with this to say this morning. As fighting steps up and Gulf export flows recede, the MOU trade is poised to fizzle. Washington will stay worried about higher fuel prices and may consider market interventions. Clayton joins us now for more. Clayton, let's just get to how we define this current phase. We've had some people come on the program and call it the new normal. What would you call it?
Hey, good morning, John. I do think that that's the case. I think that we are basically in the third phase of the Battle of the Strait of Hormuz. That first phase, of course, being the open warfare between the two sides that we saw in March. And then we had a second phase between the April 8th ceasefire and then the imposition of the U.S. blockade all the way until the MOU was adopted in early June. And we've started to see a resumption of those flows from the Strait of Hormuz and the Mideast Gulf. But as Annmarie noted in the last segment, it's really rolled over. It's really tailed off in the last few days. The market thought that this thing was over, but the signals that we're seeing in the Gulf, on the ground, in the field are it's not over. Oil assets, particularly ships, are coming under fire. But at the same time, the Iranians are probably keeping some of their powder dry. They're certainly not attacking oil installations, export terminals, refineries, et cetera, like they were during the hot war in March. But again, to Anne-Marie's point before, if you're a ship operator, you have to wonder what's the best thing for safety. Is it taking the new and improved route through the southern side of the Gulf, through Omani waters that's been endorsed by the United States, by the International Maritime Organization, or is it complying with Iran and its new Persian Gulf Strait Authority to use only the northern route through Iranian waters? And it's not only about safety, it's also about the business implications for that oil trade, because after all, if you take the northern route, you might be safer from Iranian attack, but if you run afoul of United States sanctions, what can you do with the oil anyway?
Clayton, when it comes to Washington's response, how long can they withstand this current phase before the president decides he wants to escalate or de-escalate?
Hey, Annmarie, well, I think that apparently in Washington they've already decided to escalate, and we saw much more widespread attacks against Iranian military targets over the weekend, and I think we can expect more of the same. I think crude prices are probably going to follow that headline risk a bit higher. But remember that a lot of the paper traders thought that it was much to do about nothing, that flows would eventually resume from the Gulf. Those guys look like the smart money at this point, but you can stay too long at the dance. And it's not clear that in this third phase, the United States and the Trump administration will be able to keep those flows at the levels that we saw during the past 4 weeks or so. And as we mentioned, we've already seen a pretty substantial rollover of the ones that are using their AIS beacons and the ones that are so-called going dark. And so both of those numbers are rolling over, and it makes us think that ship operators are going to pull back. So we have this battle of the narratives where I think the Trump administration will continue trying to assuage the concerns of ship operators and their owners, their other stakeholders, that the Strait is safe for use. We see these comments from CENTCOM, from the United States military, almost on a daily basis. But they have to worry about safety, and I wonder what the administration will be thinking of next if we see a resumption in fuel price escalation.
Well, Clayton, you say keep one eye on Russia, and this morning we heard from the Iranians that Sergei Lavrov will be visiting Tehran. Is there going to be more coordination between Tehran and Moscow?
Well, I think it's too early to say. I think that Russia has a lot of risk here when it comes to oil supply policy. They're going to see more competition from the Mideast Gulf if the Strait remains generally open. And it's going to be even more than before once we get to a steady state because, of course, the United Arab Emirates has left OPEC and OPEC supply coordination. So it seems like there'll be more competition there. And at the same time, the Russians have a newfound need to export even more volumes of crude oil than before because of these devastating attacks by Ukraine on Russia's refineries that have taken fully offline 6 or maybe 7 refineries at this point at peak gasoline demand season over there, just like we have it here during the summer. So there could be more gasoline tension there and also more crude supply flowing from the Mideast Gulf and Russia that has to be coordinated.
Clayton, you've alluded to this a few times now. The prospect of market intervention. We've seen the intervention throughout the summer so far. We have really eaten into inventories worldwide. What options are elsewhere on the table, Clayton, if things start to go the wrong way again?
I still think that it's too early to completely take off the table the risk, and I'm talking about the risk primarily for United States producers and sellers of controls over oil and refined product exports. You would think that with gasoline prices coming down substantially during the month of June, and I think that we'll see that reflected in CPI tomorrow, that maybe the pressure is off there. But we still have a few months to go before that critical midterm election where we really do have the balance of power kind of hanging on the results here in Washington. And so I think that the administration and other folks in Washington are going to keep a close eye on retail fuel prices, not only gasoline, but also diesel. And they could consider even ill-advised policy options like controlling or even banning exports if those prices resume their escalation.
Hey, Clayton, it's good to see you. Thank you, sir. Clayton Seigle of CSIS. We're both smiling because that policy proposal just won't die, will it? It just won't go away.
No, this is a case of good politics, potentially ahead of the midterm election, but bad policy because we operate in a global market. But I agree with Clayton, which is why I continuously ask the administration and sources, and everyone says, no, stop asking, it's not happening. But what happens when prices potentially go higher?
Crude this morning, up 3%, 78 on Brent, WTI at 73. Up next, we'll catch up with Kunst of Cleo Capital with the volatile chip trade back under pressure. Bramo is on tour this morning. We'll catch up with Lisa at 8:45 Eastern Time, a few hours away, as she catches up with Ed Bastian, the Delta Airlines CEO, as they confront and navigate record quarterly fuel costs in a previous quarter. And they navigated pretty well because demand in this economy is so good.
Well, that's what's going on right now when it looks at airlines. You think that how much can you throw at the airline industry? A lot. And still robust demand when it comes to the summer. Everyone is out there vacationing, going on holiday, business travel, take your pick.
Bramo doing lots of business travel.
Lots of Rio,
Not jealous
Atlanta.
at all. I
had my
trips.
fair share. I went to Turkey, so.
You're helping Delta too. 8:45 Eastern Time for that conversation later on this morning. If you're just joining us, welcome to the programme. Good morning to you all. Getting your week started with equity futures just on the back foot. We're down by 1/3% on the S&P, on the Nasdaq down by 1 percentage point this morning. Some relative outperformance on small caps. We're down by 0.1%. Underperformance through last week. Back-to-back weekly losses on the Russell for the first time since March. Big cap tech making a comeback in the last week. This morning, a bit weaker. We turn to the bond market, 2s, 10s and 30s. Yields up at the long end of the curve by a basis point or two. Up a single basis point on 10s to 457. 2s up a basis point as well. Let's call this 422. Trading comfortably above the policy rate of the Federal Reserve. A market that on the margin is pricing in the risk of rate hikes from this Fed. Setting the tone for that, at least for the conversation this week, CPI tomorrow morning and testimony from Fed Chair Kevin Warsh. Heading into CPI, crude bouncing, WTI and Brent. Crude this morning just short of 80, up by more than 3%.
So tomorrow at 8:30, everyone was thinking it's going to be a really good CPI print in the sense that potentially some of the inflationary impacts from oil will start to ease. But now you have a spike once again. We just heard from a guest who said the MOU trade is basically fizzling. We're in this moment where the president is really struggling to communicate what's happening. He says the ceasefire's off, but refuses to say we're back to full-fledged war, even though if you look at what everyone's doing, it's a lot of strikes that are happening. And then Kevin Warsh, for the first time as Fed chair, is going to have to speak to the Finance Committee after the CPI print. That's going to be a challenging one because with journalists, he can maybe say, I'm not offering forward guidance. I'm not sure that's going to work with congressmen and women.
It's difficult to strip the energy story out of the broader debate around inflation when inflation has been above target for 5 years of this Federal Reserve. And anxiety on the committee is already quite high. Get a bounce back in crude, it could tilt one member here, one member there to start thinking about rate hikes sometime sooner. That July meeting, only a few weeks away. As we count you down to the cash open, a few hours away, let's get you some morning movers, some single names. Yahira has more. Hey, Yahira.
Hi, John. We are seeing SK Hynix's ADRs falling at 8.7% in the pre-market, giving back some of the gains from its stellar debut on Friday. And this weakness comes after overnight in South Korea. Its shares suffered their worst drop on record as investors took profits following the U.S. listing on Friday and reacted to a report from a South Korean brokerage that suggested its quarterly earnings may miss expectations. But there is a broader risk-off mood in the market, and that is weighing on the biggest winners, the memory, the chip makers, with Micron, SanDisk, and NVIDIA all falling in the pre-market, and that overshadowing what would normally be viewed as bullish news for the sector. TSMC just gave us a preliminary look at its earnings, which come out on Thursday. Sales were very strong, reinforcing this idea that AI demand remains strong, but investors looking past that this morning. And that broader risk-off mood is also spilling over into the airlines, where higher crude prices are raising fresh concerns about fuel costs. As you said, Delta just told us on Friday that it recorded its biggest quarterly fuel bill in its history. So that just is adding to concerns of whether that could just be the beginning for these names. The next up to report is United on Wednesday. Those shares falling 1.6%. John.
Yahira, thank you. Thanks for the update. More from Yahira in the next hour. On our radar this morning, one of our top stories, the US launching fresh strikes on Iran, targeting air defences and missile sites. Tehran responding with strikes on sites in several neighbouring countries and reportedly intercepting at least 2 vessels through the Strait of Hormuz. Elsewhere, the Republican Senator Lindsey Graham has died at the age of 71. Graham representing South Carolina in the Senate for more than 2 decades. State officials expect to move quickly to appoint a replacement to serve out the rest of his term. And finally, a blockbuster week ahead. 5 of the nation's biggest banks reporting earnings before the opening bell tomorrow morning. CPI due out later in the morning at 8:30 Eastern Time. Then Later that morning, we'll hear from Fed Chair Kevin Warsh, testimony before lawmakers on Capitol Hill. You'll hear from him again on Wednesday, I believe, and we get PPI as well.
Yes, so you get CPI, you hear from him. You get PPI, you hear from him. Basically, his reaction in real time, his first Humphrey Hawkins testimony as Fed chair. And it also comes at a time that not only is he going to be able to digest all this data, but it's not just him. Before the blackout period at the end of the week, we're going to get a ton of Fed speak. So what is he saying when it comes to the testimony versus what's the rest of the committee saying, especially Governor Waller, based off what he had to say last week? A year ago, he said I was advocating for rate cuts because the labor market was not looking good. He's feeling a little bit different now. Does it mean that potentially we're moving towards a committee that thinks those insurance cuts you took last year, maybe they need to come out?
I'm pleased you brought up Governor Waller because he speaks later on today at 12:30 Eastern Time. Is that a man who thinks this meeting is live or not? That's what it comes down to for me, at least. Got a broader debate about the backdrop, got thresholds. You want to understand how they react to the incoming data. No doubt the governor's going to spend time on that. But the headline people are looking for is whether that meeting is live or not in a few weeks' time. Are there individuals actively going into that meeting looking to push for higher interest rates?
And potentially won't know until we see the CPI data and the PPI data. Potentially that, for some individuals, is going to push whether or not this meeting is live. Are we actually going to see some of the heat get taken off of that data or not? What's interesting is we hear from Waller before the data, and we hear for, of course, the Fed chair after we get both CPI and PPI.
Governor Waller today, 12:30 Eastern Time, speaking at the New York Association of Business Economics. Looking forward to hearing from the governor. A key speech to start the week. Turning to tech, the volatile chip trade under pressure. SK Hynix plunging by the most on record, sparking a sell-off in Korea and US equity futures. Sarah Kunst of Cleo Capital writing, tech isn't a monolith, and that's even more true in semi and AI exposed names. This week, we'll see if they move in a block or on their own merits. Sarah joins us now for more. Sarah, this morning at least, moving on a block and really setting the tone is South Korea once again. Sarah, how key is that trade in South Korea across just two names for the global tech trade?
It does seem like it's the story right now. And the ironic thing here is that sell-off you're seeing, particularly in SK Hynix today in Korea, you pull back and you look at the one-year chart and they're up something like plus 500%, right? So wanting to lock in a little bit of those gains as all of that exposure that had been maybe from the US, through indexes, through some of those more synthetic trades, or just from people sitting in the US who found a way to buy in Korea, now they can buy in the US. And we know that those valuations tend to be higher, so they're likely going to do that. So I don't see this sell-off as a huge problem. Now I just need the entire rest of the market to agree with me.
We'll see if that changes as we get closer to the opening bell, Sarah. We can reflect on Friday as well. Fantastic demand for a record issue by a foreign company, equity issue here in the United States. Sarah, what was your reaction to the amount of people that just welcomed that supply with open eyes, open arms?
I wasn't surprised. I think that Asia has taught the market over the last couple years with Taiwan Semiconductor, which is one of my favorite names, as well as obviously a lot of the exposure that you have to fabs and the entire ecosystem there, that, hey, you want to track this, and if you can buy in, you should. We know that historically South Korean companies do trade at a little bit of a discount, so it's not shocking to me that there was a feeling that there is value here, that maybe this is a better priced way into some of these AI and semi positions versus, Taiwan Semis had a monster couple of years. NVIDIA, obviously, everybody in the US feels like they have already been kind of fully bought. And so I think people were really excited to bring in new names to buy.
When it comes to memory chip shortages, the SK Hynix CEO caught up with Ed Ludlow and said it'll probably persist beyond 2030. Do you agree, Sarah?
I think the question is going to be demand. Yes, right. If the demand continues to follow kind of the current trajectory, there will be sort of behind. Keep in mind, it's not bad for them necessarily to have a shortage because it means people are willing to pay more to lock in orders further in advance. It means that their businesses are healthier, but certainly they are trying to produce more as quickly as they can, which is slow. The real question is, does the demand can stay. We know that companies are looking at their bills from the Anthropics and OpenAIs of the world, wanting to tone that down, capping usage. The leaderboards are going away that were ubiquitous a couple months ago. And then on the flip side, we know that Anthropic and OpenAI and SpaceX and all of these AI names are also kind of looking at their P&Ls going, oh, wow, this is insanely expensive to let everybody make a cat video of their cat that died 20 years ago 10 times in a row and not post it anywhere and not pay us for it.
Well, when you say it's all about demand, a few weeks ago, I remember, of course, Apple having to raise prices because of the memory shortage. At some point, will demand destruction solve this problem?
I don't know that demand destruction on price will, unless the OpenAIs and the Anthropics of the world massively raise prices so that you're actually paying what you spend. A lot of people have been likening it to kind of the Ubers of the world. You used to be able to basically go across the country in an Uber Black for $10, right? And then the VCs and the public market said, hey, maybe you should pay what this actually costs. The prices went up, and they still have a healthy business, but it did change sort of how people value it and how people think about usage. So I do think we will eventually see something similar with the Neo Labs, but then you also have to remember that the Metas and the Googles of the world have tremendous amounts of cash, and so they do make money already, so they can actually afford to sort of subsidize our AI use for longer. And so I do think there's a really big question, especially when you pull back and remember that for the most part, we don't actually know what month over month or weekly users look like for most of these AI labs.
They are increasingly turning to the debt market to raise capital, though, Sarah. I think it's interesting to see how the warm welcome that we received, that SK Hynix received for the equity issue, wasn't really reflected in the Amazon debt issue earlier in the week. Just raises questions. I'm not saying that we're getting a full-throated pushback by capital markets on the fixed income side, but just the fixed income message, for me at least, was if you want to issue here, you're going to have to pay up. Sarah, did you see the same thing in the Amazon debt issue last week?
Yeah, I think that the debt piece of it has not gotten the same warm reception. One, I think that it certainly doesn't have as much retail and Main Street exposure as the equity does. And two, I think that people are starting to really dig in and say, wait, why do you need this money, right? If this is going to work so well, is there something that we don't understand that you do that makes you want debt instead of just relying on your cash flows, instead of relying on the equity? And so overall, the debt buyer has been much more cautious than the equity buyer.
Sarah Kunst of Cleo Capital. Sarah, thank you. Appreciate it. That was a key distinction last week. We had two big offerings. One on the equity side, SK Hynix, the biggest equity issue we've seen from a foreign company here in the United States. Open arms, well received on the equity side. You saw that stock rally into the weekend. On the debt side, when Amazon came to market, bit of pushback. Not just on the Amazon debt, but in the secondary market across a lot of tech issuers. And maybe the prospect of, increasingly the prospect of later this year, if you want to issue debt in this market right now, this market's going to push you to pay up for it, and pay up maybe big time in the years to come if it continues. Equity futures this morning on the S&P, negative by 1/3%. Tech stocks underperforming. With an update on news worldwide with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Thank you, John. Qatar's former emir, Sheikh Hamad bin Khalifa Al Thani, has died at the age of 74. Sheikh Hamad overthrew his father in a bloodless coup in 1995. He transformed the Gulf state into one of the world's wealthiest nations thanks to its vast natural gas reserves. Apple is taking OpenAI to court, accusing the startup of stealing trade secrets. The lawsuit accuses a former Apple engineer of downloading confidential files and continuing to access Apple's systems after joining OpenAI. TSMC reporting a 36% jump in quarterly sales. The results meeting elevated expectations, signaling global demand for AI computing remains intact. The company's steady growth highlights its central role in producing the world's most advanced chips for data centers and smartphones. And that is your Bloomberg brief. John.
Vonnie, thank you. Tells you a lot about sentiment that people are talking more about what's happening with SK Hynix and less about fantastic numbers out of Taiwan Semi. That's the situation for now, at least. Up next on the programme, awaiting inflation data.
Pieces of the CPI this month are going to matter more than what we've seen historically.
This is not like we're waiting until 2028 to see inflation moving down.
You have the market pricing in one hike and then followed by cuts. That to me looks like risk management.
Up next, we'll catch up with Sonal Desai of Franklin Templeton. Live from New York City, you're watching Bloomberg TV. Live from New York. Welcome back to the program. A snapshot of the price action for you. Down a third on the S&P. Underperformance in tech. It's last week upside down in reverse. The Nasdaq 100 is down by 1 full percentage point. The Russell with some relative outperformance in a down market. We're down by close to 0.2% on small caps. Switch up the board and get to the bond market. Yields bleeding higher by a single basis point across the curve. 2s north of 420, 10s north of 450, 30s north of 5%. Heading into CPI tomorrow morning. Heading into CPI tomorrow morning. This data here in the commodity market. Brent and WTI pushing higher, up by more than 3% so far this morning. 2 weeks of gains for crude. Last week, a move of 5% plus, briefly breaching $80 a barrel last week on Brent. This morning, getting close to that level again.
And right now, it's a deadlock in the Strait of Hormuz. And even though over the weekend you had some ships go through, put their transponders off, basically guide in the dark, in secret, today, what we're seeing in terms of the data is no ships are moving through. So potentially, this story is going to get a whole lot worse if ships are unwilling to take that risk right now.
What does it mean for the outlook for prices? Under surveillance this morning, awaiting inflation data.
Pieces of the CPI this month are going to matter more than what we've seen historically.
This is not like we're waiting until 2028 to see inflation moving down.
You have the market pricing in one hike and then followed by cuts. That to me looks like risk management.
If the Fed does feel the need to hike before the end of the year, they're arguably hiking for the right reason.
So here's the latest this morning. Fed Chair Kevin Warsh testifying before Congress this week with new inflation data also on the way. Sonal Desai Franklin Templeton writing, Warsh wants to move back towards a situation where financial markets react mostly to the economic data. Asset prices would then become a valuable additional source of information for the Fed. Sonal joins us now for more. Sonal, good morning and good to see you. Let's get to the price action. What's the source of information and the shape of the curve this morning?
You know, honestly, very little. Day-to-day movements aren't telling you much. I do think we're moving to a point where 10-year treasuries are moving back to where they probably should be, which I've said for a while is more like 475 to 5 in terms of fair value. So overall, I think these are short-term moves. We're going to see more volatility as markets absorb the fact that we're not getting forward guidance or will not be getting forward guidance from the Fed.
So now, why do you believe that the 10-year belongs somewhere closer to 5 than, say, 4?
So mainly because, Jonathan, look, I think that neutral Fed funds is closer to 4 than 350. 2% productivity growth, 2% inflation, if the Fed actually meets its target, gets you to 4. Now, if I just look, rule of thumb, if I look at historical yield curve shape, at a time that the economy is not falling into recession and is not overheating, we should have an upward sloping yield curve of 100 to 150 basis points. Knock off half of that, if you will, for the fact that, you know, you've got abundant liquidity, you've got, all of that feeds in to generally saying, OK, you're not going to get all the way to fair value. And I just don't see a recession in the horizon.
So now, just build on that if you can then. So you've got the yield curve potentially normalising to something as steep as 100 to 150 basis points. Shouldn't you expect tends to be higher eventually beyond 5 if the Fed needs to catch up on the front end and maintain that spread?
I think that it could, yeah. I think we could. But the other piece to keep in mind is we're still in a situation of truly abundant liquidity. Therefore, you might not get back all the way to what I would consider theoretical fair value on the 10-year in a rush. On the other hand, there are so many other factors which come into play, including what's happening to fiscal policy, which people aren't talking about very much. But, there's absolutely no consolidation coming. And around the world, fiscal policy is very easy as well. So overall, I'd say yields are going higher. And that's before we even start talking about inflation.
Well, Kevin Warsh will have his first Humphrey Hawkins testimony this week, of course, tomorrow and then Wednesday in the Senate. Can he avoid the questions he avoided with journalists in front of elected officials?
Well, I'm not sure he really avoided it. He said he wasn't going to comment on the near-term outlook for the economy. And I think it's fair for him to avoid that because he is sitting there and the entire council is sitting there and they're taking into account all available data. And he can certainly recap what that available data says, which is an economy which is certainly not in dire straits. And on the other hand, from an inflation perspective, there are definitely some tailwinds and there's some headwinds. And so I think he can certainly talk about all of that and not get into what the Fed's next move is likely to be.
Is the risk then for this week that someone else fills that void, like a Philip Jefferson or John Williams or, of course, Governor Waller?
So, that to me is the most interesting thing, Annmarie, because I think that Kevin Warsh has made pretty clear that he would like the Fed to step away a little bit from essentially forward guidance in terms of the next policy moves. I didn't get the impression that the FOMC disagreed with that. So to me, the most interesting thing this week is going to be exactly how each of these governors responds to questions and how explicit they're going to be on something which could be interpreted as forward guidance.
Well, so I'm with you. They agreed to have a very short statement, but I'm not sure how much you can read into that at this point. Have they agreed? Can you mandate other officials on the committee not to provide guidance and say where they think policy should be?
No, I don't think you can mandate it. But the question is, Jonathan, did they talk about this and talk about the relative usefulness of having a market which is hanging onto every nuance of a Fed official's words instead of every nuance that comes out of the data? And I don't know. I think that for a market which isn't illiquid, which isn't frozen, we're not in immediate post-COVID global shutdown, we're not in a post-global financial crisis space, maybe the market does need to revert to a little bit more of what I would consider healthy volatility and pricing in of risk. And that is something, it's not happening overnight, but I'm going to be very interested in seeing over the next several months if the Fed in general moves in this direction.
Well, help us price that risk this morning. Do you think the July meeting's live?
Honestly, no. I don't think they're raising rates this week because you just don't have enough data. Why would they raise rates as quickly as this week? There is absolutely no reason. We've got close to zero visibility on what's happening in the Middle East. We have zero visibility on whether we're getting second-round effects yet. We're all waiting to see, are we going to see food price escalation? We haven't seen any of this so far. We have not. That's a genuine truth. And where they are in relative terms is not so far away from where they need to be that it's egregious. We're not talking about, we're not talking about the transitory point for the Fed, right? We're not talking about a Fed which is on the verge of seeing inflation ratchet up to 6, 7, 8%. Above target. And we have been above target for the better part of 3 years. And so I don't think they're under any pressure, frankly, to do anything this week, meeting.
It's good to see you. Sonal Desai of Franklin Templeton. No pressure on the Fed. Little pressure, according to Sonal. That next Fed meeting, July 29th. CPI tomorrow morning. We'll hear from the Fed Chair, Kevin Warsh, as well, later that morning, too. Coming up next, we'll catch up with Steve Auth of Federated, John Lieber of Eurasia Group, Erika Najarian of UBS, Kristina Campmany of Invesco. The second hour of Bloomberg Surveillance is just around the corner, with equity futures down 1/3% on the S&P. Bond yields higher across the curve by around a single basis point, and crude on WTI and Brent higher by more than 3%.
The U.S. has too much inflation.
Pieces of the CPI this month are going to matter more than what we've seen historically.
The scenario for a hike is one where inflation stays elevated.
You have the market pricing in one hike and then followed by cuts.
If the Fed does feel the need to hike, they're arguably hiking for the right reason.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your price action of scores looks like this. Equity futures on the back foot this morning, just a little bit softer on the S&P. We're down a quarter. On the Nasdaq 100, we're down by 0.8%. The tech trade at the epicenter of the weakness out of South Korea. In the bond market, 2s, 10s and 30s, yields bleeding just a little bit higher, up by a basis point plus across the curve. 2s north of 420, 10s north of 450, 30s north of 5%. Setting the tone for this morning, this move in crude, WTI and Brent. WTI and Brent this morning up by more than 3%. Brent crude breaching $80 a barrel briefly last week. This morning, 78. WTI at 73. Heading into this in the next 24 hours. Take a look at this. Look at it twice. Sit on it for as long as you want. Tomorrow morning, we get 5 banks on Wall Street reporting earnings. We get CPI at 8:30 Eastern Time, and then later, the Fed Chair Kevin Warsh testifies before the House Financial Services Committee. All of that in the space of what, 4 hours?
Pick your poison, what you care about this week and what's going to be the next catalyst. I go back to what Sonal Desai just said, though. The Fed has no insight, which is why she doesn't think this is a live meeting in July, on what's going on in the Middle East. But I look what's going on in the Middle East and think, when are we going to get that insight? We went from war to somewhat peace to now this purgatory, this stalemate that I don't see ending in the next few months based off of what we're seeing out of Iran and the United States, continuously both laying different claims to what's going on in the Strait of Hormuz. And that's going to push oil prices higher, and it's going to potentially make it much more challenging for this Federal Reserve to talk about the inflation story.
As Lisa and others have said repeatedly, it's persistence that can be the problem. And as many guests have suggested in just the last week, included this morning, if this is the new normal and it keeps crude and energy prices elevated, even if we don't retest 100, if you've got a Fed that's anxious about being above target for 5 consecutive years, the itch to hike interest rates will only get greater if the energy story continues to be a problem through the summer.
Especially if you think about it, if you're on the Fed and you think about it as actually, we're not hiking from here. We're just taking back insurance cuts that we had last year. And what we are doing is what we were supposed to do, which is risk management.
3 cuts last year, 3 cuts the year before that. Those cuts have been adding up. Later on this morning, 8:45 Eastern Time. Speaking of Bramo, Lisa's on tour. She's catching up with Ed Bastian, the Delta Airlines CEO, a little bit later this morning. 8:45, don't miss that. Navigating higher energy prices against the backdrop, at least if you're the Delta CEO, of good demand.
Good demand. They reaffirmed a full-year profit guidance, even though they have an incredibly challenging environment. How do you think about jet fuel costs, not even the present day? What is it going to be in August? What's it going to be the end of the year? At the same time, people are still traveling. It is peak travel season this summer. People are traveling for business. I mean, you see all the travel right now, what's going on in the United States with the World Cup, on top of everyone chasing the, cheaper yen, what's going on potentially in Japan.
Need to make Japan happen this year, right? Trip to Tokyo, 160.
I told my parents this, and they looked at the flight times, and they're like, ooh, and I was like, but you don't understand. It's the cheapest we can ever go.
Dollar yen around 162 so far this morning. Brent crude 78.60. Coming up this hour, Stephen Auth, the Federated Hermes, expecting earnings season to bolster the bull market. We'll catch up with Erika Najarian of UBS with 5 key themes to watch ahead of results from the big banks, and Kristina Campmany of Invesco previewing a busy week of inflation data and Fed speak. We begin this hour with stocks lower as AI concerns weigh on investors ahead of the latest round of earnings. Stephen Auth of Federated Hermes are writing, given high expectations, the setup isn't perfect for this season to ignite another big move higher in the next 6 weeks. But for longer-term investors, this season should reinforce the bull case. Stephen joins us now for more. Steve, good morning, sir.
Good morning.
I can't believe that's the last time I get to say that on TV. Stephen Auth retiring in the next couple of months. Steve, can I just say how much I've learned from you over the last decade plus? I came from London in early 16, scarred by back-to-back crises, obsessed with what can go wrong. And you taught me pretty quickly to start thinking more about what could go right and that risk can cut both ways. You've rode the bull market the whole way up, and every time you've been on, I've sat here opposite you and said, Steve, what can go wrong? What can go wrong? And over time, I've started to ask more, what can go right? What can go right this morning?
Well, in the long term, a lot of things are going right. I mean, earnings are exploding to the upside, Jonathan. I mean, this bull market started with earnings down below $200, and we're looking at $450. We raised our numbers twice now on 28 earnings. We like to look at where things are heading. I think this earnings season, looking at plus 22% year over year earnings growth, and those numbers are probably too low. The earnings, stocks eat nominal earnings, and some of that is inflation for sure, but that's why people invest in stocks and not bonds, because they eat nominal earnings. And I think it's going to reinforce the case. Now, the stocks have run up into this. The sell side has raised their numbers into the earnings season. Last 3 months, earnings are up about 4% estimates off of where they were three months ago. Normally, we're cutting into earnings. So it doesn't seem to us like there's going to be a big disappointment out there. There may be stock by stock for sure. It's become a stock picker's market, but it looks pretty solid to us. I mean, the banks' earnings, the banks have been raising dividends, since their capital test the last few weeks ago. So they're not doing that because earnings are about to surprise to the downside.
We should reflect on how unusual this is, though, in direction and in size. As you indicated, to be raising estimates into earnings season and to have expectations this high outside of recoveries is incredibly rare. Very, very unusual. In fact, some people might say unprecedented. What's behind that positive earnings shock?
A lot of it is margins. The bears have been saying for actually the extent of this bull market, which has been almost 15 years, a 13-year anniversary a few weeks ago, the bears have been saying quarter after quarter we're at peak earnings, because it makes them crazy. I mean, peak margins, rather, that the margins keep going up. But the margins do keep going up because the mix of the U.S. economy is shifting increasingly towards higher margin businesses. And the companies that are in the index are using things like now AI, but before that, the Internet of Things and the cloud. It's a transformative technological change that's driving across the board margins to go higher. And, one of the reasons we've had this broadening out idea for the market is that, the first stage of AI was the spenders, then it was the companies that are immediately beneficiaries of that, and now it's the guys that are using AI across the broader economy. So we see margins going up, and we've got margins continuing to rise over the next couple of years.
I'm going to take the flip side of Jonathan's question. What could go wrong?
Well, a lot of things could go wrong as usual. That's the wall of worry we're riding. But what is it? The Strait of Hormuz. That was supposed to shut down everything. And what's happened is the world has figured out how to get oil out of the Mideast without the Strait of Hormuz. We were looking for 10 million barrels a day. We were all hysterical. How many barrels a day are now getting through the Strait or some other means? I said to you this a few months ago. If it can't happen, it won't happen. People are figuring out how to get the oil out. So I know it's the headline today, but my guess is a year from now, no one's going to really care about the Strait of Hormuz.
But how long can we live in this somewhat purgatory? We're not at peace. We're not at outright war.
It looks like we can go on for a while, Annmarie. I don't see it. Every day, the Iranian military capability is declining. So it feels to me like we hit the peak of problems here probably 3 months ago. And since then, it's been going down. It's going to be kind of like a purgatory, as you said, but we're finding other ways to get the oil out. And the market's kind of looking past this issue. Another thing, like the chip stocks today are getting hammered. And we talked about this on the show. You guys have been talking about this for a while. Spot market versus futures market. And, one of the lessons I've learned over the years is focus on the futures market, not the spot market. So for oil, it became very obvious to people. Spot oil has a clearing price. Longer-term investors were looking at the futures market. You guys kept talking about that. That was the right thing to do. But if you think about it, even in the stock market, there's a kind of spot market for stocks and a longer-term market for stocks. The spot market in chip stocks, is being set in Korea. These are folks that are using the market as a gambling mechanism. They're playing short-term movements. They're playing charts. They're not really looking at fundamentals. So we had a huge move up, 5x. Now we're at a 30% correction. A long-term investor looks at that and says, okay, the first move up in these chip stocks was an earnings explosion. We've seen that. The next move now is a revaluation, because now we're down to 3 manufacturers. We had, which is a really well-controlled oligopoly, Adding CapEx is very, very expensive, so that is a discipline in itself. And what's happening is, and we're seeing it, we've been expecting this, the chip manufacturers are now getting long-term contracts with built-in price increases. That's changing them from being cyclical growth companies to growth compounders. They're still priced like cyclical companies. So somewhere out there is a revaluation in these stocks.
Give me an idea what those numbers look like. They trade at single-digit PEs right now. Where should they be?
We think they should probably, over the next 5 years, trade up closer to a market multiple, at least to 15 times.
That's a big reevaluation.
Sure.
You think they'll be able to convince this market that this earnings story is that durable, that sustainable?
I think it's going to prove to be.
They've escaped the boom-bust cycle.
We'll see. No, I mean, not completely, Jonathan, but not like they had. Not boom-bust. Maybe a little more like this.
They're less cyclical, which is what you're getting at.
Right.
Why have they become...
But that revaluation takes more time.
Well,
I mean,
just explain to everyone why they've become less cyclical.
Well, we had...
Because this market right now is not buying the valuation story.
We had 6 or 7 of these guys. Every time prices went up, they added capacity, and then it's like an airline. You know, too much capacity, you got to drive the price down until you can sell it. Now there's only 3 of them. It costs an enormous amount of money to build a fab nowadays. And they're being much more disciplined about adding capacity. And they're basically don't have enough capacity for the next 3 years. So we've got a pretty good backdrop. And now they're signing long-term contracts. We think probably 50% of their revenue base over the next couple of years is going to be kind of locked, not, softly locked in.
Is this your contrarian bet right now? The revaluation trade of some of these names? Because it feels slightly contrarian. A lot of people are saying maybe this is the peak of the story. They started to raise capital. This is SK Hynix on Friday to build out capacity.
Well, we've been warning our investors that a correction was coming across the board. To us, the spot market for stocks in general has gotten kind of overheated. What we've been happy to see is been more of a rolling correction, which is a healthier way to do it. You guys have been talking about that as well on the show. And on the chip stocks, yeah, I mean, this has been a pretty serious correction. And usually in bull markets, 20 to 30% pullbacks are the time to be for long-term investors to add. Now, do I know anything about the spot market? Not much more than you. It could be down another 10, 20% the next 3 weeks. But I think layering into these stocks here makes sense.
We've got some time for some final words of retirement wisdom. Over your career, going back to when? The 80s? Prudential?
Yeah, right? The 80s, 79.
What have you got to share with us this morning? Just reflect on that. Just some advice to the next generation of investors. What's your advice for them?
Well, the big piece, I'm writing a book about this, humility at the highs. But humility at the highs, confidence at the lows, integrity always. Those 3 lessons in equities or in any other form of advancement in life make a lot of sense.
Steve, you're a gentleman. Thank you, sir.
Thank you, John.
We're going to spend more time together away from the studio anyway. It's good to see you. Thank you, Steve. Stephen Auth there, a Federated Hermes, just a fantastic career. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. Republican Senator Mitch McConnell giving an update on his health. The 84-year-old saying in a statement that he suffered a fall in June and contracted pneumonia that required hospital treatment. He says he's moved from the hospital to a rehab centre, but still isn't healthy enough to return to the Senate. Meta is expanding its plans for a data center in Louisiana. The social media and AI company committing an additional $40 billion to the site it began constructing in 2024, bringing its total commitment for the campus to over $250 billion. The World Cup semi-finals are set. England moving on after defeating Norway 2-1. They'll take on the defending champions Argentina, who once again survived, beating Switzerland 3-1. Kicking off the semis tomorrow will be a European blockbuster with France taking on Spain. And that is your Bloomberg Brief. John.
Couple of days of fantastic football coming up. Away from the markets. Of course, the week is absolutely stacked already, if that wasn't enough. Up next on the programme, protecting the Strait.
Those boats are coming out of the Hormuz Strait. We're doing very well with respect to the Hormuz Strait.
Those ships are flowing out of the Hormuz Strait like nobody's ever seen before, actually. The Strait is open.
Up next, John Lieber of Eurasia Group, live from New York City this morning. Good morning. Stocks are negative this morning, down by 1/3 on the S&P. Just fantastic advice from Steve Auth of Federated. What was it? Humility at the highs, confidence at the lows, and integrity in between.
Yeah, fantastic advice, I think, if you're in the market, but also just for life.
Yeah, for life and markets. Steve, just one of the best. Nasdaq futures this morning down by 0.9. Some tech jitters coming out of South Korea. We'll see if those losses hold as we get closer and closer to the cash open. That's the equity story. In the bond market, 2s, 10s and 30s, yields pushing just a little bit higher, up by a basis point at the front end, up by 2. The further out you go on 10s this morning, 457 on 30s, just north of 5%. Crude up on WTI and on Brent. WTI this morning at 73, Brent crude at 78. Under surveillance this morning, protecting the Strait.
The Strait is open.
Those boats are coming out of the Hormuz Strait. We're doing very well with respect to the Hormuz Strait. We have an oil gusher. The Strait is totally open.
Those ships are flowing out of the Hormuz Strait like nobody's ever seen before, actually.
So here's the latest this morning. Crude moving higher as the US and Iran give conflicting claims over the status of the Strait of Hormuz. Both sides exchanging new strikes following a weekend of escalation. Bloomberg's Tyler Kendall has the latest from Washington. Hey, Tyler.
Hey, John. Well, breaking within the last hour, we heard from Iranian state TV reiterating a threat from the IRGC that the Strait of Hormuz will be closed until the U.S. ends interference. In their words, we know Iran has been dismayed by the fact that more vessels started using that U.S. coordinated route that hugs the coast of Oman instead of getting closer to that route that would be closer to Iran. But still, the U.S. is saying that that's not true. CENTCOM says that they are working to ensure freedom of navigation after the U.S. military confirmed it conducted at least 3 waves of strikes this weekend designed to degrade Iran's ability to target commercial shipping. There are still a lot of big questions here, though, as we know that observable traffic in the Strait has basically ground to a halt, though data analyzed by Bloomberg News does show that ships transiting with their transponders off, so-called dark crossings, are now exceeding those observable transits for at least the last 3 days. And the fighting is continuing. New this morning, Iran says that its military is launching drones at U.S. Army positions in Kuwait following a weekend of targeting allies. John, it's very clear that Iran is making its outreach to some of its regional partners, including Iran's foreign minister meeting with his counterpart in Oman, and then Iran's oil minister meeting with his counterpart from Russia ahead of what is expected to be a planned visit from Russia's foreign minister to Iran sometime in the near future.
Tyler Kendall with the latest in Washington. Tyler, thank you. Appreciate it. What's important for markets here, what they chose to hit, what they chose not to hit, is just as, maybe even more, important.
Why it's interesting that CENTCOM is saying U.S. forces did not strike Karg Island in Iran. That would be a serious escalation when it comes to the risk premium and the price in the oil market.
This is not a popular conflict down in Washington, D.C. Capitol Hill has been pushing back against the White House, and the Republican Party has lost a key interventionist against the backdrop of an increasingly isolationist party. Lindsey Graham, the senator from South Carolina, has died over the weekend. John Lieber of Eurasia Group wrote this. Graham was a hawk on Iran and cultivated a lot of relationships overseas, one of the most prominent Republican senators on foreign policy. John, we have a hole in that party this morning. What are your reflections on the senator from South Carolina and what it means for the outlook for foreign policy for his party?
Yeah, I mean, look, Lindsey Graham was he would be the first to tell you that he was in favor of an extremely interventionist American foreign policy. He'd been somebody that had wanted the U.S. to target Iran for a very long time. And he was a key interlocutor across the Middle East, across Europe, for the U.S. and for the Republican Party on that interventionist agenda. And of course, importantly, he was also an important influence on Donald Trump. Who kept a lot of the relationship alive and warm with the United States Senate when a lot of people wanted to walk away from Trump. And I think we have to give Graham a lot of credit for pivoting from being one of Trump's biggest critics to being somebody who was pretty effective at pushing the president towards this more interventionist stance that we've seen in Iran, in Venezuela, and even keeping a lot of the U.S. influence alive in Ukraine. So I think that's an important role that Graham played. It's not entirely clear who will play that. Now, of course, the president's got a lot of other influences around him, and he's in this war far too deep now to back out of it. But over the longer term, this is going to represent a shift in the Republican Party, like you said, John, from this interventionist type like Lindsey Graham, who are, sadly dying off, to the more isolationist Republican that I think keeps the U.S. out of these types of foreign entanglements.
John, he wasn't just an interlocutor on the international stage, also domestically. It wasn't just Republican senators in the White House. He also was an individual that has very long-term relationships with Democrats. Who can fill that kind of void, an individual that's almost a fixer behind the scenes?
I'm not sure we know yet. A lot of the new generation of Republicans are quite a bit younger. Graham had been around a long time, since about 25, 26 years in the United States Senate. And I don't think you see those kinds of relationships developing the way they did, or they could have. They had spaced to 20 years ago when members would go on congressional delegations together frequently and generally were much more positively inclined towards each other. So I think it might be, you're going to lose a bit of bipartisanship too with the passing of the torch to the new generation.
Do you think there's more of a chance now with his passing that the Russian sanctions bill gets put through and Trump signs it?
I doubt it. I think that bill faces hurdles, and Graham was one of the biggest proponents. I don't think Trump's in favor of it. Now, that probably depends on what happens in Ukraine. The dynamic over the last month or two has been that the Ukrainians have sort of got a boost of momentum, have been attacking a lot more deep into Russia, and so as a result are looking like they're on their front foot instead of their back foot in that war. That dynamic could actually help push the Trump administration to be much more tougher on Russia and maybe potentially embrace those sanctions. But they've got to get past Iran right now, and they've got to get past the bigger issues they're dealing with across Latin America as well.
John, another key senator in focus as well is a man that you've worked quite closely with in the past, Senator Mitch McConnell. Can I get your reflections on what's happening with Senator Mitch McConnell? Because it was a bit of a mystery up until the last 24 hours, and for some remains a bit of a mystery.
Yeah, and so mystery that Senator McConnell is getting up there in years, and he had a childhood battle with polio that has, I think, affecting him to this day. He's announced his intention to step down, and he's going to be vacating his seat for the next generation in this upcoming election cycle. And I think that, he's always been fairly private about his health, and he doesn't share a lot of details. And so what we've seen is an aging senator dealing with health issues who doesn't really want to talk about it in public. And I think that's led to a lot of speculation about what's actually going on with him. He's not missing any important votes at the moment, and he's finally over the weekend released a statement giving some clarity about what's going on. I think that we're looking at the end of a long and well-regarded career for him, and I wish him all the best in his recovery from this illness.
John, we appreciate your clarity this morning. Thank you, John Lieber there of Eurasia Group. To John's point, when you seek out privacy, but you're in public office, tends to be incompatible.
Well, this is where I have a problem. If you're scheduled to come for votes, scheduled to represent a state, well, then when you go missing and there's not a lot of clarity about you and also your wife, who is a former cabinet minister, secretary, goes to China, there needs to be answers. You can't just go dark.
It provides some oxygen for conspiracy theories, let's put it that way. OK, coming up next on the programme, Erika Najarian of UBS looking ahead to a key week of big bank earnings, plus Yahira has your morning movers. SK Hynix ADRs are lower ahead of its full first day of trading. The stock is down by more than 8%. Coming up in 1 hour and 15 minutes, don't miss it, Ed Bastian sitting down with Bloomberg's Lisa Abramowicz. Bramo coming up a little bit later with the Delta Airlines CEO. Looking forward to that at 8:45 Eastern Time. Ahead of that, the price action looks like this. Equity futures on the S&P 500 pulling back following 2 days of gains, 2 weeks of gains. On the S&P, we're down by a third this morning. On the Nasdaq 100, we're down by 0.9. The epicenter for the tech jitters, guess where? South Korea. SK Hynix down a record 15% plus overnight in the Asian session. That ripples through Europe. and into US equity futures. In the bond market, 2s, 10s and 30s. Yields higher across the curve by a single basis point, setting the tone for this move in crude. WTI and Brent higher by more than 3% through much of this morning, following a weekend of escalation over the weekend and into Monday to start a new week, trading strikes between the US and Iran.
Trading strikes in the Strait of Hormuz right now. There's no ships moving through, according to the data what we're seeing. You saw some ships, about a dozen commodity vessels moving over the weekend, and they did so by putting their transponders off. So going in secret, going in the dark. Right now, today, no one is feeling safe enough to go through. And I am interested why CENTCOM came out and said U.S. forces did not strike Karg Island in Iran. They came out and felt the need to say that. Something potentially is going on there. And I think that's important because Karg Island obviously is the epicenter, the lifeblood of the Iranian oil and gas world. And if that was to be struck, you would see prices potentially a lot higher than we are today.
We breached 80 last week, still south of that this morning, 78.50. If you look at WTI, 73 handle, so $5 away from the post-war low. And I mentioned that we're still $35 away from the post-war high. So it's a market pretty comfortable, relatively speaking, to the developments in the last week.
Yeah, what did Steve Auth say? We can pretty much live through, and it's proven, we've already proven in this market that we can live through this almost purgatory. We're not at peace, but we're not at full-fledged war. And it's been difficult to understand from the president how he would describe this, because he said the ceasefire is off. But when pressed by reporters last week when I was with him in Turkey, he would not commit to going back to a full-fledged war.
Purgatory comes with its own problems. Just short of 74 this morning on WTI. As we count you down to the open and bound, 2 hours away. Let's get you some single names to morning movers. Yahara has more. Hey, Yahara.
Hi, John. This is not purgatory. SK Hynix ADRs are falling 8.4% in the pre-market, giving back some of the gains after its Friday debut. The weakness coming after overnight, as you said, it suffered its worst drop on record as investors took profits following the listing and reacted to a report from a South Korean brokerage suggesting that quarterly earnings could miss expectations. But there is a broader risk-off mood in the market tied to, as what you were talking about, the war in Iran, and that is weighing on the market's biggest winners, the memory names, so Micron, SanDisk, and Western Digital, all falling in the pre-market, and that overshadowing what would otherwise be seen as good news from TSMC. It gave its preliminary report. Its full earnings come out on Thursday, and sales were strong, reinforcing that AI demand remains strong, but investors looking past that this morning. And we end on some sell-side action with Shopify rising 2.6% in the pre-market after Geoffrey's upgraded the stock to a buy, saying it expects it to beat quarterly results. Plus, they say that the e-commerce giant is well positioned as AI agents become increasingly part of the shopping experience. John.
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. On our radar this morning, shares of SK Hynix tumbling by a record 15% plus on the South Korean exchange, sparking a rout across the broader tech sector. The group's chairman remaining confident in the company.
I have some confidence that the demand will be grow. Our supply capacity never going to catch up. So first thing is that we have to keep the stock price stable, and hopefully in the long run, then we can have that upside potentials.
Nothing stable about the stock price this morning. The chipmaker's US listed shares falling ahead of its first full trading day. That stock is down by more than 8%. Elsewhere, the US and Iran trading fresh strikes while issuing conflicting declarations over the Strait of Hormuz. Tehran saying the waterway is now closed, quote, until further notice. US Central Command disputing claims, saying the strait remains open. And finally, Kevin Warsh making his first appearance before Congress as Fed chair this week. Warsh will testify in front of the House Financial Services Committee tomorrow following the June CPI report. His testimony continues Wednesday before the Senate Banking Committee.
So his first Humphrey Hawkins testimony as Federal Reserve Chair. And I think what's so interesting about this week is that we're going to get live reaction from the Fed chair after two key data points that we really care about. You keep asking this question, is July live? Is this a live Fed meeting? Well, we're going to find out tomorrow morning, potentially at 8:30, and then we're going to get some color around that from the Fed chair. Then we're going to get PPI. And then we're going to once again get some color around that from the Fed chair. On top of that, we have a ton of Fed speak this week before we have the blackout period at the end of the week. So I think it's incredibly important that we're having the data on the front end of the week, and then all of that, we're going to get the Federal Reserve massive members talking about what all of this means.
Governor Waller, a key member, speaking a little bit later this afternoon. Before we get all of that, the data and hearing from Chair Warsh, we get this. Earnings on deck, with 5 of the nation's biggest banks reporting before the opening bell tomorrow. Erika Najarian of UBS remaining mostly bullish on the sector, writing, we expect any beats to come mostly from cap markets and trading, and any misses to come from deposit cost surprises and higher costs related to higher transactional fees. Erika joins us now for more. Erika, good morning.
Good morning.
It's never been like this. I don't remember the last time they all did this at the same time. What's that about?
I don't know. Everybody had a great 4th of July weekend, long weekend, and they're like, oh,
I'm feeling sick.
I'm feeling sick Tuesday. Look at my earnings, everybody.
Right. Fantastic. What are you expecting to see tomorrow morning?
So we're all expecting great things, right? But can the mega cap banks really exceed the mega expectations that have been put on? So the whisper numbers from the buy side or the investor base, especially for Goldman and Morgan, tend to be higher than where consensus is. And so with 5 of the 6 of them reporting and expectations ratcheted up pretty high, I'm a little bit nervous that tomorrow is going to be a little bit of a mess and that it's going to be difficult to stand out, especially since I expect that JPMorgan's earnings call will be somewhat dominated by succession questions. And so if you think about sort of what sticks out in a 5-day, sort of 5-bank reporting day, that might be it. So results might be, you have to really stand out, right, to catch the headline.
So let's try and unpack some of it now. So you mentioned the likes of Goldman. So Goldman's up 20% this year. Morgan Stanley's up 25%. Those two names have almost traded as one, had a fantastic year. How crowded is positioning around some of those names within the banking sector? Because I would often come on air and I'd say the banks as a group on the S&P, record highs. But the performance spread across that group of banks is actually pretty wide, isn't it?
So it feels a little bit like the investor base is playing kind of like a little dangerous game, and they're actually long Goldman, short Morgan Stanley. And so they're trying to be long the purest expression of capital markets and short a name that's trading at a very lofty price to tangible book multiple. And seasonally speaking, wealth flows are typically negatively impacted by tax payments. So they're, I think, also banking on that. But that is a super, super crowded trade. And so not only do they have to beat consensus significantly, both companies, but we also have to have pretty encouraging, outlooks in terms of the pipeline.
So when it comes to Goldman, out of all of them, is that going to be the highest bar for them to clear?
I think Goldman has probably the highest bar to clear, yes, tomorrow, given positioning.
So then who do you want to be exposed to if you're an investor going into tomorrow?
I like a little Wells here, right?
Because no one's talking about it.
No one's talking about them. Everyone's like, oh, they may not make their $50 billion net interest income target, although Charlie, the CEO, and Mike, the CFO, had reiterated it during conference season in May and June. And, they're not as purely exposed to cap markets names. But, if they can hit anywhere near consensus, that stock is really sort of inexpensive. And if they could reiterate in that public forum that they could hit their targets, I think that stock could actually have a little bit of a squeeze.
Do you see a new phase to the banks trade emerging with the likes of Wells Fargo and others, a purer play on just the traditional banking story away from capital markets? Is there a next phase to this long bank trade?
I had hoped so, but I'm still skeptical.
What
right?
makes you skeptical?
Because at the end of the day, as I think about what the fundamental question mark is, it's really about deposit growth and deposit cost challenges. And that is a little bit more acute in the regional bank names or names that don't have as much capital markets exposure. So if Warsh sounds hawkish, for example, during the testimony, and all of a sudden September is live, and by the way, loan growth is fantastic. However, it's outpacing deposit growth by 2 to 1. And then all of a sudden there's sort of like a potential for earnings downgrades because of higher deposit costs versus the fantasy of the capital markets revisions continuing to go up and up and up.
So wait a sec, higher rates would be a problem for some of these banks?
I think higher rates could be a problem for some of these banks if it's coming from the short end. The regional banks are very much tethered to the shape of the curve. The ideal scenario for them is that if we had a few cuts on the short end of the curve and the curve was steep.
You said September. So do you not think July is even an optionality to be live?
Girl, who knows? But I mean, if you don't see those ships passing,
we got a problem.
You know, we have a problem. If the CPI number's hot, we have a problem.
Maybe good news for JPMorgan. They won't talk about any of this because on the call, you know what they'll be talking about. They'll be talking about succession planning. You said it. Succession does matter, though. What did you find out? What did we learn in the last few weeks with JPMorgan?
So I think we learned that the sort of rolling retirement for Jamie is over, right?
You think it is done now?
I think it is done now. And I think that I would peg his remaining time with the length of the retention award contracts that they gave to Doug Petno and Troy Rohrbaugh.
So do you think he needs to come out with clarity on when he is going to retire?
I think so, because I do think that long-only investors that are staunchly loyal to owning the stock, you know, still somewhat believe in this rolling retirement, right? Especially since, you know, the sort of heiress apparent, the star that everybody had thought was going to take over, had left, right? And so they have sort of less time to get to know Troy Rohrbaugh, especially, who's newer than Doug Petno. And so I think a little bit of clarity, but also I think investors are wondering, what is Jamie looking for, you know, the new CEO role? Right?
What do you think he's looking for?
I don't know. I'm going to ask him tomorrow, right? But because what is the key? What are the key characteristics for JPMorgan, who's already so far in the lead, to further future-proof their business? And by the way, you're not just CEO and chairman of JPMorgan. You are the spokesperson for the entire financial services industry. So
do we want that as a shareholder? Do we want that person to fill those shoes, to be the spokesperson for the industry? Is that something we actually want?
There's no choice. They're huge, right? They're going to be $1 trillion in market cap pretty soon.
Does it automatically pass to the next CEO of JPMorgan, or potentially the spokesperson is someone who's already a CEO at another bank?
Look, just given, you know, technically it could be Bank of America, right? But given JPMorgan's size and just its returns, right? I mean, and also, you know, there's also a retirement question over the next several years with Brian Moynihan as well, right? And so, you know, it does automatically still is JPMorgan.
How great is the key man risk at JPMorgan? I ask this question with a great deal of respect for the man and, of course, the institution. That goes without saying. But to believe in the stock, you have to believe that the company survives past the handover from one man to another. There's got to be more to a company than just one man running JPMorgan.
You could have said that about GE and Disney, right? And you can say the same thing on the like Berkshire Hathaway and Apple. But there is an enormous amount of talent. The reason that JPMorgan's returns are 20% plus on tangible common equity is everybody goes into 270 Park or wherever else and rows the boat in the same direction, right? Obviously, it's chock full of talent. But for the stock and for investors, key man risk is real. At some point, hopefully, it's called key woman risk, FYI. But the key man risk is real.
Well, it is over at Citi. But when it comes to John's point, isn't this part of his job to set up a proper successor? So as a shareholder, you're not sitting here wondering what's going to happen next.
But I think that's what he's doing, right? I think that we're just a little bit perhaps surprised that Marianne Lake is not part of the discussion.
Was that a fumble?
Is that a fumble? Look, I think Marianne Lake is extraordinarily talented, but there has to be a reason why one of the best boards in the globe, one of the best bank boards in the globe decided that Troy Rohrbaugh and Doug Petno had to be sort of the ultimate successors. And I think he's doing the right thing, right? Troy comes from a trading background, and now he's running, you know, the largest consumer bank in the U.S. And Doug Petno gets to run the whole, you know, corporate investment bank on his own. So I think they're doing the right thing. I just think that Marianne was so considered to be the heiress apparent that everyone needs a second to digest the new reality.
Does this feel like a repeat of Goldman, Harvey versus David? Does it feel like that again, or is this different? You lived through that, we all did. Is this different?
A little bit.
What makes this one different over at JPMorgan?
It was just such a longer. We have been talking about succession like forever, right? You know, I think I had a 3 handle in my age when we started talking about, you know, succession. And so it's just that there's been like so many, like Mike Kavanaugh, there's so Jen Peepsack. There were so many other folks to have considered That's what makes it different from, the Goldman succession.
Nobody believes you've got anything but a 3 handle on your age, Erika. It's good to see you. Thank you. Appreciate it.
Thank you.
Najarian of UBS, thank you very much. The big banks, 5 of them reporting tomorrow morning. Just Morgan Stanley, I believe, sitting this one out and reporting on Wednesday morning. Let's give you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. The US and Canada are preparing to open a new bridge connecting Detroit with Windsor, Ontario. The Gordie Howe International Bridge will open July 27th. The deal was announced after Ottawa agreed to give the US a share of net toll profits. The U.S. Department of Justice launching a grand jury investigation into United Auto Workers President Shawn Fain. The DOJ is looking into accusations that Fain pressured another high-ranking union official to secure benefits for his fiancée and her sister. In an email to Bloomberg, Fain called the allegations false. In sports, Jannik Sinner winning his second straight Wimbledon trophy, beating Alexander Zverev in 4 sets. The world #1 player dropped the first set before pulling ahead for the rest of the match. It's the Italian's 5th Grand Slam title and first since last year's Wimbledon tournament. And that is your Bloomberg brief. John.
Vonnie, thank you. Thanks for the update. Up next, awaiting inflation data.
We're already starting to see some downside surprises to inflation, and that's why we do see value across a number of the different government bond markets.
Up next, we'll catch up with Kristina Campmany of Invesco, live from New York. You're watching Bloomberg TV. Stocks down this morning by 1/3% on the S&P, by 0.9 on the Nasdaq 100. In the bond market, yields higher across the curve by a single basis point. 2s, 10s and 30s. 2s up by a basis point to 4.22, just off the highs of the year. And in the commodity market, Brent and WTI look like this going into CPI tomorrow morning. Brent at 78, WTI at 73.80. Under surveillance this morning, awaiting inflation data.
You will be able to see enough sequential improvement in inflation to keep the Fed on hold. We're already starting to see some downside surprises to inflation, and that's why we do see value across a number of the different government bond markets.
So here's the latest this morning. Investors bracing for a busy week of economic data and Fed speak, hoping they'll get some for insight into the central bank's outlook for monetary policy. Kristina Campmany of Invesco writing inflation data will continue to drive markets' behaviour, with general labour market resilience removing much of a tail for easier policy in the short term. Kristina joins us now for more. Kristina, good morning. Good to see you.
Good morning. Thanks for
having me.
So we
get back-to-back CPI and then share Warsh. What do you expect to see and hear tomorrow morning?
So I think that the market is very excited for this week. We have earnings. We have all the Fed speak just beyond Warsh too, because so far it's been a little cagey of like how much information and insight we really get. I think for the inflation number itself, the markets are looking for a kind of okay number with like a 0.2 core. I think it takes really like a 0.4 core or more to say July is 100% a done deal.
That's what I was going to ask you, Kristina. If we get an in line, okay, does that just shut the door on the July debate?
I don't think that they go in July, but I don't think it shuts the door in the pricing of July. I think we kind of sit here maybe at 7, 8, even half price. I think we live in a different world that you can go into meetings with much more price and it's less of this certainty. And it's interesting because in the press conference after the meeting, Warsh talked a lot about, I want to take a step back from forward guidance and all of this market hand-holding, and it's not what the market dictates because we're not in crisis. But at the same time, we have to have a shift back to how the market's pricing is the most valuable tool for the Fed and switching of this. So I think it'll be this interesting dynamic as we learn of how do we interpret the Fed chair's communication. Does the balance of communication from the rest of the board change, or is it status quo? Like, how much agreement is there on how much we give? So I think we're still in this learning phase, and I think that we need a bit more, and maybe September is the more likely of if the data goes that way, and if you see a pickup or stickiness further in inflation, that may be September, but I think July is a harder case.
How much do you think he's going to be influenced by the CPI print, his testimony?
I don't know that he'll be influenced by it particularly. I think it'll be interesting how he responds into the questioning, because both the press conference and at Sintra, he was I have a task force for this. I don't want to give you anything, really. I think that's a harder case to do when you're testifying to Congress. And But I don't think it'll be as much like reactionary to this data point versus here's the trajectory of where we're coming from. We're coming from years of sticky inflation. We were concerned about the labor market. That's proved stronger in the last 6 months.
I agree with you. I think it's harder to back away from elected officials. Tuesday then might be a little bit easier because some people will say, you know, no offense to, you know, Chairman French Hill, but the Senate might be a little bit more of a serious juncture. And that's going to be after PPI. Is Wednesday the more interesting testimony?
I think both will be interesting. I think you might get more challenging questions and like, I think what his tone is and how he responds and his willingness to engage, this is new to all of us in terms of how we're reading him in this role. So I think it's the jury's out of, are you talking strong? Is it speak softly, carry a big stick, that like just the threat of saying we're very aggressive on inflation is enough for the market, or are you ready to act at a moment's notice?
We always frame this as a grilling, and then it turns out to be a total dud down on Capitol Hill. You know how it goes. Sort of individual social media videos that each individual is trying to clip and send to their constituents.
Especially in the House.
Right.
But what did we see in Sintra? A lot of dad jokes. Like, that's not going to fly. It's not going to fly in the Senate. It's just not at this moment.
Kristina, before you go, I want to talk about supply and the price you need to pay to clear that supply. Amazon last week, are we getting some pushback in credit?
Finally, a little bit. But credit spreads remain very tight. I think the market is starting to deal with this, like grappling with this. You have a lot of supply that's come into the market, and you really are not being compensated out the curve for that. And you have questions of why are some of these hyperscalers issuing so much? What is there something under the hood that we don't know about? Is there a need for this cash? Are you just optically taking advantage of the market because you think you can? And up until this point, it's been gobbled up. I mean, this spring, long dated supply has been absorbed super easily.
I see the door being open, but for a high yield, a wider spread maybe. What would it take for the door to slam shut?
I don't know. I think when we take a step back and look at like who is the investor base or market, there is a structural investor base for long duration assets. And even internationally, there is still that money coming into U.S. credit. So I don't know, like barring some kind of crisis, that the door slams shut. I think you have a slower supply period over the summer, so maybe that kind of can support things a little bit more. But I think it's either we have a very different world from the Fed and talking about, even different from what we're talking about now, of we might get hikes, but it's, do we get 75 basis points of hikes? That's normalization off of the last 75 of easing, for like a real hiking cycle or something that changes the dynamic in terms of that, I think, to change it.
Kristina, good to see you. It always is. Thank you. Kristina Campmany there of Invesco. Looking ahead to what we could hear tomorrow morning from Chair Warsh and what we could see in the CPI data. Coming up tomorrow, we'll be continuing to cover that and all the financials. In the next hour, we'll catch up with Chris Harvey of CIBC, Steve Pagliuca of Bain Capital, Lindsey of Stifel, and the Delta CEO, Ed Bastian.
We're still in a really strong earnings environment for U.S. stocks.
Tech is going to remain well supported.
Really, it's about rebalancing.
The churn is not necessarily detrimental.
Investors are being cautious ahead of the earnings season.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Did you hear about the Jay-Z concert last night? It took hours for people to get into Yankee Stadium.
Yeah.
Some problems outside of the stadium.
I heard it was crazy.
The performance didn't start until midnight, and it went on until the early hours of this morning.
Went on to the early hours this morning. I felt really bad for those people who had to go to work.
Were you one of those people?
I was one of those people who had to go to work.
What time did you get out of Yankee Stadium last night?
I left at 2 a.m.
Okay, so 6 hours ago.
But guess what? He still did. I left friends behind. Hello, friends, Chris, Marcy, everyone.
Okay.
50 minutes. He did another 50 minutes.
After you left?
Yes, he said.
Right.
So I left after Rihanna. I had some intel that Rihanna was going to come out, and I was like, I'm not missing Riri. Then Beyonce came out. It was unbelievable. Saturday night, Eminem was there. Incredible. Jay-Z, incredible. And you know what? Hats off to the Yankee executives and Rock Nation. Once they realized there was a problem outside, they wanted to control the crowd and said, we're going to get everyone in safely, then we'll start the concert. And that meant Jay-Z started after midnight.
So let's just do some basic maths on this. So You got to studio a few hours before the show when I walked in the door, and you left there at 2. How much have you slept?
Sleep.
Have you slept?
You sleep when you're dead, isn't that the saying?
Something like that, yeah. Okay. Not made anything up this morning, as far as I can tell, so
Nope.
you're doing pretty well. Hang in there. All right.
Up.
We've burned through another 2 minutes, 58 to go. You can do this, all right. Live from New York City this morning. Good morning to you all. The third hour of Bloomberg Surveillance starts right now, and your price action looks like this. Equity futures down by a third on the S&P. We're down by 1% on the Nasdaq 100. On the Russell, some outperformance this morning following some underperformance last week. In a down market, we're down by a third of 1% on the Russell 2000. Elsewhere in the bond market, 2s, 10s and 30s. Yields bleeding higher by a single basis point. 2s up to, let's call it 422. With this move in crude supporting higher yields. WTI and Brent higher by more than 3%. 78 on Brent, WTI just short of 74. Heading into this week right here, and what a week it is. Wow, what a Tuesday morning we've got coming up for you. Tomorrow morning, 5 major banks on Wall Street reporting earnings. By the time you get to 8:30, you'll have all of that plus CPI data, and then about 90 minutes after that, Chair Warsh on Capitol Hill in front of the House Financial Services Committee.
How many aides are going to have to change some of their questions for Kevin Warsh because of all the data, the slew of data and the bank earnings we're going to get before he appears his first testimony in front of Congress as Federal Reserve Chair? I just wonder how much the data might influence or tilt how he talks about the market right now. And then if that's not enough, Wednesday, PPI and his live commentary once again.
Remember his confirmation hearing when he was asked about being a sock puppet?
Yes.
Sock puppet and things like that. Looking at the caliber and the individuals that he's put together to run some of these task forces that are both international and domestic and lean Republican and have worked in Democratic White Houses as well.
Obama, yeah.
I think it's a bit of an effort to sit here and sit there tomorrow morning and make the case that this is somehow a partisan individual who's looking to do the work of the president in the White House.
The task force are anything but partisan, and they're also global. You have the former Bank of England governor, Mervyn King, also part of this. You have individuals like Mark Andreessen who understand what's going on in the AI trade and potentially what is that going to mean for the productivity of this economy right here in the United States. You have a lot of individuals that can meet the moment right now. But I do wonder how much that is going to be a punt for Kevin Warsh. He's like, well, now let me talk about...
We've got a task force.
Yes, we have a task force. I have names to the task force. Let me read off everyone's CVs and burn a ton of time.
24 hours away, full coverage coming up right here on Bloomberg. Coming up this hour, we'll catch up with Chris Harvey of CIBC, with markets facing a week full of event risk. Steve Pagliuca of Bain Capital on how the World Cup has boosted football's future in America. And the Delta Airlines CEO, Ed Bastian, on navigating record quarterly fuel expenses. Lisa catching up with Ed later on this hour. We begin this hour with stocks sliding following a rocky session for the tech trade in South Korea. Chris Harvey of CIBC writing the CapEx AI cycle still has legs and demand is fire from satiated. Chris joins us now for more. Chris, good morning. Good to see you.
Good morning. Good.
Spreads are tight. The data's good. Is it as simple as that? Keep buying stocks?
It's a secular trade. We don't want to overthink the secular trade. We're looking for things. We went back to 2008 when real rates were higher, spreads were widening, June was weak, and there's some similarities, but they're far from that close.
You know what people are sort of digging into now, the pushback you saw in credit and investment grade last week to some of the tech debt that was issued on Amazon, that kind of stuff, starting to think about whether that reshapes the outlook for CapEx, what that could mean for the overall trade. What's your reaction to that?
My reaction to that is the first thing I would say is the capital markets are wide open, right? I think we had 7 $25 billion offerings this year. I think you had to go back to between 19 and 25, you had that many. So that's telling you that there's plenty of capital around. People are willing to fund risky endeavors. And if I'm Kevin Warsh, what I'm thinking about is if I need to slow things down, I have to start attacking the balance sheet, because all the liquidity that you're seeing coming out of the credit markets, that's where there's a lot of inflation coming from.
Is that the potential headwind to the bull trade, that you see a Fed that emerges that needs to tighten financial conditions?
I think so. He said that in his press conference. The good thing is, at least for risk seekers, the good thing is you're not going to attack the balance sheet probably until late 27, maybe 28, right? And so as a result, it's still open. right? But if you look at what's happening, the credit markets are, spreads were at generational tights. Issuance has been phenomenal, and the amount of issuance and risk-seeking that's being done with it is incredible. It's just driving things at this point in time. And until you stop that, you're just not going to stop that equity trade.
Jonathan and I were just talking about the task force, and I loved this line in your note. We subscribe to the belief that the new Fed would feel and act like a tech investor walking into an old economy company. Are you happy with the names you've heard?
I'm happy with the name. I'm happy with what he's doing. I'm happy that he's going back and saying we need to relook at everything. I'm happy that he did not put dots down, because that shows that tradition is not so important to him. He's really about the empirical data and the empirical evidence. And I'm happy that we're getting a different look at things. At the end of the day, he's right. We haven't got inflation back down to our 2% target in 5 years. Something needs to be done, right? And I think he's working on that something right now.
Do you think him not putting a dot on the plot is a harbinger of potentially we're just getting rid of the dot plot?
Maybe. I don't know. That gets a little complicated for me, because I'm not sure the rules and the rationale for the dot plot. But what it tells me is that I'm just not stuck to tradition, right? I need to look. He's going back and saying, hey, we're not getting the right data. We're not getting enough data. We're not getting timely enough data. We're not getting quality data. We need to look at communication, inflation, balance sheet, so on and so forth. Nothing is sacred at this point in time. Nothing's off the board. And I think that's very important. And that's a very strong signal to the markets and to myself.
That's why I really like Doug McMillon, former Walmart CEO. Is there a man that knows more about data and prices than that guy right there to help oversee the task force on prices and data?
Especially a part of the American consumer base that potentially rate hikes or rate cuts influence and impact the most.
The itch, Chris, to rotate away from the winners. I see it all the time. The start of every quarter, the start of every year.
Yeah.
Do you resist the urge to rotate away from the chips, the high flyers?
Every quarter, every month, every day, we look for reasons to get away from the momentum trade. What we said is, it's overbought, it needed to reprice, it did. The thing about the momentum trade is you need regime change. You're not going to get regime change unless you're getting a much more aggressive Fed, or the economy is going to accelerate much quicker, right? You can have these bouts of repricing, we've had that, but you need regime change. And we're just not seeing it at this point in time.
You see this as short term then?
We do see it as short term. There's certain areas of the market that we think got a little bit ahead of themselves, a little bit bubbly. But at the end of the day, I just don't see regime change in the short term.
Where did the hyperscalers fit into the outlook then? Because that was part of the trade. I'm sure you saw it a million times from a million different people. Lean away from the chips, lean back into the hyperscalers and the Mag 7 that became the Lag 7.
Yeah.
What's the outlook now for you?
So if I look at the communications sector, and you have a couple of hyperscalers in there, that sector looks pretty attractive to us from a valuation point of view, from a technical point of view, from a fundamental point of view. I'm not going to they don't allow me to talk about individual stocks so much.
Not going to pin you down.
But that group looks pretty interesting to us. And if you look at the momentum trade, and this is always true, the momentum trade begins to morph. You're starting to see more healthcare names pop up in the momentum trade. And so at the end of the day, until you get that regime change, momentum's going to be here. It's not time to go bottom fishing.
Big morning for the banks tomorrow morning.
Right.
Morgan Stanley and Goldman, I'm not expecting you to do single names, but the pure capital market plays have had great years, up by more than 20%. Rest of the sector, the other names, they're a little bit more diversified, have lagged.
Right.
What do you want to do with the banks and the financials into the remainder of the year?
Yeah, we still like the capital markets group. The capital markets, I think M&A still has another leg up here. One of the issues that I think the banks are dealing with, or investors are questioning about the banks, is just as rates go higher, especially at the front end, deposits need to reprice. And what does that do to net interest margins? And so that there's that overhang with the banks. And they just don't have enough. They have some capital market exposure, just not enough compared to some of the other players.
My deposit rate's been going down even though they've not been cutting interest rates. What's that about? We'll have a word with them. Chris, it's good to see you. Thank you. Chris Harvey there of CIBC on resisting the urge to rotate. Let's get you an update on news elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Republican Senator Mitch McConnell giving an update on his health. The 84-year-old saying in a statement that he suffered a fall in June and contracted pneumonia that required hospital treatment. He's moved from the hospital to a rehab centre but isn't healthy enough to return to the Senate, he says. Apple is taking OpenAI to court, accusing the startup of stealing trade secrets. The lawsuit accuses a former Apple engineer of downloading confidential files and continuing to access Apple systems after joining OpenAI. Disney's live-action version of its animated hit Moana flopping at the box office. The film grossing an estimated $95 million globally. The original 2016 animated film grossed $643.3 million and became the most watched Disney movie of all time on Disney+. And that is your Bloomberg Brief. John.
Ronnie, thank you. Thank you for the update. So this from the president just moments ago, speaking to an American broadcaster. We're taking over the Strait of Hormuz. Iran has nothing. I'm not sure how to read into those comments this morning, given the strikes we've seen over the weekend and into the start of this week.
The United States has control of one part of the Strait of Hormuz. It's the part that hugs the Omani coast, and that is where, if you are a vessel, you could potentially get the protection of the United States. But it hasn't meant you are safe, because we have seen IRGC attack those vessels. The IRGC and Iran basically control another part of the strait where they want to make sure that you get approval before you decide to traverse the strait. Potentially then you're going to have an issue with the U.S. government.
Crude up by almost 4% this morning. Brent crude just short of 79. WTI 374. Up next on the programme, the morning calls, plus we'll catch up with Steve Pagliuca of Bain Capital on surging sports team valuation as World Cup mania sweeps across the nation.
A lot of things are going right. I mean, earnings are exploding to the upside. It doesn't seem to us like there's going to be a big disappointment out there. There may be stock by stock for sure. It's become a stock picker's market. It's a transformative technological change that's driving across the board margins to go higher. We've got margins continuing to rise over the next couple of years.
I'm going to miss Steve. Stephen Auth of Federated in his last broadcast conversation before his well-earned retirement. Congratulations to Steve and to his family. Equity futures this morning look like this. Your scores building as follows. Going into the cash open 1 hour and 14 minutes away. We're down by 0.4 on the S&P, down by 1 percentage point on the Nasdaq. SK Hynix in a South Korean trade down by a record 15% plus. That took the Kospi down. That's rippled into Europe and across into US equity futures as well. Into the bond market, 2s, 10s and 30s yields a bit higher into CPI tomorrow morning, up by 2 basis points now, 423 on 2s, close to 460 on 10s. With this move building in crude and not fading, WTI and Brent up by close to 4%. Brent crude closer and closer to 80 once again.
In comments from the President of the United States this morning, talking to the American press, Jonathan, the latest being we'll probably run the Strait. So it's giving concepts of a plan, not that they're definitely going in and taking over. Remember, there's really 2 paths right now with the Strait of Hormuz. There's one that's U.S. controlled and there's one that's Iranian controlled. Could the U.S. go in a little bit more forcefully with the Fifth Fleet and other naval assets and maybe take control? Potentially. But the president came out first a little bit more forceful, saying we will run the Strait, to now probably run the Strait. So we will become the guardian of the Strait. We've heard some of this before, and yet here we are in this stalemate between both these countries fighting over control of that and continuous attacks over the weekend.
That story just won't go away. Crude pushing higher this morning. That's the price action. Let's get to some morning calls. First up, Citi raising its price target on Apple to $365, saying the tech giant should continue gaining market share. Your second call from JPMorgan upgrading American Express to overweight, saying the company offers exposure to the most insulated cohort in consumer finance. That stock is up by 1%. And your third and final call from Bernstein, lifting its price target on Delta to 106, citing growing confidence that the industry's pricing environment is improving. That stock up this morning, or rather down by 0.6%. And that this morning are your morning calls. Let's turn to sports. World Cup fever erupting across the country. More than 50 million people tuning in for the US match against Belgium, making it the most watched football game in the country's history. It comes as valuations for sports teams surge to new records. The world's top clubs more than doubling in value in the last 4 years, with private equity and media deals injecting massive amounts of capital. Steve Pagliuca, senior advisory partner at Bain Capital and co-owner of Atalanta Football Club, joins us now for more. Steve, welcome to the programme, my good friend. It's good to see you. How do we translate this fantastic interest in a 4-year World Cup cycle into a bigger, stickier interest in club football being played around the world all season, every year?
You're seeing that already with the World Cup, but I think fundamentally what's going to have to happen for soccer in the USA to be a top 5, dominant sport is the economic structure is going to have to change. Right now, the payments for players in UK, Italy are probably 5 to 6 times what they make in the United States. So the best talent really is centering on the Premier League, Serie A, and the leagues in Europe. So unless you change the economic structure, you're always going to have lesser players in the United States.
And Steve, one thing I've found as well at the youth level, and it was a surprise to me coming to this country more than a decade ago, is that for the rest of the world, this is a very accessible, almost working-class sport. You don't need money to play football in the rest of the world. What I've found here increasingly, Steve, is that this has become a rich kid's sport. Steve, what can we do about that at the ground level for youth football in this country, in America?
Well, I think we have to look at the whole ground level grassroots system. As you know, Europe, it's very easily to get trained. These clubs can have boys. We have an academy with 452 boys in the Milan area in Bergamo, and it's a very cost free, and everybody can play. So we have to look at the United States system and say, how do we kind of get away from it just being a rich person sport where you can get the training and get training across the country.
At the same time, Steve, these conversations often descend, I think, into what can the US learn from the rest of the world. I do think the global sport can learn something from the US. The Seattle Seahawks and evaluation of that franchise, I think, speaks to that. Selling for close to $10 billion. For a franchise that outside of this country, I hate to say it, hardly anyone will know what that team does, let alone where it plays. If you say the Seahawks to anyone in, say, Italy, Steve, they don't know what that team does. And yet they have a valuation at a multiple of a football club out of Europe that the whole world recognises. What can Europe and the rest of the world learn from the way sports is run in these countries to make sure that we get full valuations and the kind of franchise values that we see across this country, Steve?
Well, first of all, a big advantage in the USA sports is there's no relegation. So relegation, which is has always been happening in English football and the rest of Europe, really gives you more risks as a club, number one. Number two, the economic structures of the USA sports are better with cost controls. There's a hard cap in the NFL. The NFL is kind of the, I would say, most profitable and best run league out there with a hard cap so that the clubs can generate revenues. So really getting a system over in Europe where there is more financial fair play, cost control, and maybe playing around with the relegation rules could make the values go a lot higher.
Steve, for a lot of Americans, this has been the first introduction to FIFA, really firsthand. Do you think they've done a good job with the World Cup stateside?
Well, if you look at record revenues, I think they're creating, the World Cup has created $13 billion over the cycle, $10 billion right now. And so far the games have had more interest, I think, than any other games in the history of the sport. So I think it's hard to be critical. Obviously, there were some issues with pricing and crowds, but so far it's gone very well. It's gone very well for America. I know up in Boston, they're now in love with Scotland. I think we ran out of beer in the whole city, which I never thought could happen, but it's been an amazing experience for everybody.
Yes, if you can get a hold of tickets. To Jonathan's point earlier, how expensive soccer is in general in the United States to breach that entry. But I'm talking more about some of the controversies with FIFA. Do you think that's maybe put some Americans off of soccer?
I haven't seen that. I mean, people really are in love with the game. And it's certainly, the controversy makes people talk about it even more. And everybody's really focused on, who's going to win this incredible trophy, being the best country and best soccer team in the world.
Steve, have you got any tickets to the final?
I'm going to the semifinal in Atlanta tomorrow, and then leaving from there and actually going to Milan to introduce Coach Sarri at Atalanta, then coming back for the final.
Very cool.
It should be an exciting week.
Very, very cool. Always envious of your life, Steve. Always envious, aren't you?
Yeah, I'm Steve, who are you rooting for? Who do you want to win?
Well, I was rooting for Belgium since we have Charles de Ketelaere scored 3 goals in the competition. He plays for Atalanta. But I think I'd like to see England win. Great Britain, they haven't won in such a long time. And I love watching Harry Kane. He's kind of a magician out there.
Steve, can I just say congrats to CDK as well? Because his growth at your club, far better than anything we did with him at AC Milan. And I'll leave that there. Steve, it's good to see you. Best of luck for the new season. Thank you.
It's great to be here.
Steve
Thanks.
Pagliuca there of Bain Capital.
Interesting. He thinks it's coming home. Isn't that the phrase?
It's coming home.
I lived there for 8 years, and that's all I heard. It's coming home. It's coming home.
That's all I've heard for 30 years since the song came out in 1996, and here we are. It used to be 30 years of hurt, and now it's 60, because the last time we won it was 1966. Can I just say, the complaints that I hear about soccer or football in this country, about the lack of fluidity, the lack of athleticism compared to, say, the speed and strength of something you'd see in American football. I've heard loads of complaints, VAR.
Total garbage.
I'm going to park that. What I think it comes down to is something much more fundamental. As a guy, as a boy, it's the sport you watch with your father. You grow up watching. And then you start to gravitate towards that sport. You play it with your dad, your parent. And then you learn to grow and love the team that they supported. And then it gets passed on from generation to generation to generation. To crack that, in this country, you need to focus aggressively on making sure that this is a game that is played by kids. And unfortunately, as you know, that once you get to a certain age in this country, to play football or soccer, it becomes very, very expensive. That is not true in Europe or anywhere else, to the same degree that it is true in this country.
Playing soccer growing up, it was expensive. When you started joining all these travel teams, it became a lot more pricier. And then you have to do the indoor leagues in the winter. What you're describing in America is akin to baseball. Little league, very inexpensive. You can start off with t-ball, and everyone has a team. That is what it feels like having lived in Europe, how everyone feels about either their Serie A team or their Premier League.
That's where the focus needs to be, at least in our opinion. Up next on the programme, Lindsey Piegza as Steve Full. So equities stand near the lows going into the cash open 1 hour away. We're down by 0.4 on the S&P. You can just see from this picture where the losses are concentrated. It's in tech, it's in the Nasdaq. We're down by more than 1 percentage point. But the issues around tech and SK Hynix, South Korea, importing that volatility. It's not the only story this morning. Yields are pushing higher too across the yield curve, going into inflation data tomorrow and testimony from Fed Chair Kevin Warsh. We're up by 2 basis points on twos, up by 3, close to 3 basis points. The further out the curve you go, 10's around 460 so far this morning. Building on this move in crude, up on WTI, higher on Brent. Brent crude up by close to 4%, WTI at 74. And not really words of comfort coming from the president this morning. I'm not sure how to translate this for you. I'll just share the headlines. This from the president, speaking to Fox earlier on this morning. We're going to get paid for guarding the Strait. We'll become the guardian of the Strait. We'll probably run the Strait. What does that mean? I've heard it before. I'm not sure how it works in practice.
Yeah, and he just said we just want to be reimbursed for doing all this, for putting our people in danger. Basically saying, I mean, the Strait of Hormuz is an international waterway, but obviously I think potentially protecting it for years has been the U.S. Navy and Fifth Fleet, of course, right? Now we're in a new paradigm. There's been a paradigm seismic shift with the fact that the Iranians have demonstrated they can take control of the Strait of Hormuz. I'm not really sure what the president's getting at here. No one will be reimbursing him unless maybe he struck up some deal with NATO. Don't think that's happening. But the fact of the matter is, it would be beneficial to this White House and everyone else if potentially the Fifth Fleet is able to get control of the Strait of
Those
Hormuz.
comments this morning not reducing prices, that's for sure, on both WTI And on Brent, 60 minutes out from the opening bell, let's get you some morning movers. Yahira has more. Hey, Yahira.
Hi, John. After its hot debut on Friday, SK Hynix shares ADRs are giving up some of those gains, down nearly 10% in the pre-market, and that coming after some major weakness overnight in South Korea, where its shares suffered a record drop, down 15%, as investors took profits after that U.S. listing on Friday. But overall, as you mentioned, it is a risk-off mood in the market, and that is weighing on the biggest winners, the memory names. So we are seeing Micron and SanDisk falling in the pre-market and overshadowing what would otherwise normally be viewed as good news for this sector. TSMC came out with preliminary results. Its full results are out on Thursday, and its sales came in strong, reinforcing this idea that AI demand remains strong, but investors looking past that this morning. And we end on some bank M&A. We are seeing First Hawaiian shares falling after announcing it's buying Trico Bank shares. This company, which is rising in an all-stock deal. The combined company will have about $34 billion in assets, making it the sixth largest bank headquartered in the Western U.S. It's a reminder that we have a lot of regional banks scattered all across the country, so this is an area ripe for M&A, and it comes just ahead of bank earnings bonanza tomorrow. John?
Yahira, thank you. Thank you for the update. The bank earnings bonanza, 5 banks kicking off earnings season on Wall Street in one single morning tomorrow morning. Earnings season just around the corner. We'll be talking about earnings in about 10 minutes' time. Don't miss it. Bramo catching up with Ed Bastia, the Delta Airlines CEO, in about 10 minutes' time. A blockbuster week ahead for the U.S. economy as well. 2 days of inflation data alongside 2 days of testimony on Capitol Hill from Fed Chair Kevin Warsh. Mike McKee has your preview. Good morning, Mike.
Good morning, John. I am not jealous of you and Annmarie trying to juggle all of the earnings along with Kevin Warsh and the inflation numbers. Remember when we talked about inflation could go up, either go down? Tomorrow we get CPI, and CPI forecast to go down on a month-over-month basis for the first time in 6 years because gasoline prices fell during the month of June. And then on Wednesday, we get PPI, which should give us some hints of price pressures going forward, although it too is expected to drop a little bit. We also get on Wednesday the Beige Book, and we'll see what people around the country are telling the Fed about prices and where we're going. Thursday, retail sales. How much influenced by inflation? How much influenced by people's concerns about the economy and consumer confidence, which is really lousy? Also, Philly Fed certainly has a price component to it. And then Friday, import prices round out the week of inflation, along with housing starts. And we do have this big week of Fed speak. We will start with Chris Waller today, along with Mickey Bowman. She's already out on the wires talking about regulation. But Waller, who is going to be the counterpoint probably to Kevin Warsh going forward on the Fed, speaking at noon today. We'll see what he has to say about the economy. Tomorrow, Kevin Warsh, 90 minutes after that CPI report comes out. So you know they're going to be talking about prices, along with Barr, Goolsbee, Cook, and Bowman. Wednesday, Kevin Warsh is back up before the Senate. And we've got a whole bunch of others speaking on Thursday. We basically have 11 of the 19 members speaking this week, and then Saturday the Fed blackout begins. By that time, maybe we'll have some idea of what they're thinking about for the July meeting, although if Kevin Warsh has his way, we won't. But we will have a very busy day tomorrow for you guys.
Mike, let's look at those names together. Let's go through them. Can you help me answer this? How big is the gap between the group of individuals that want to keep rates unchanged and the group of individuals more inclined to hike? And can this move in energy, to what extent can it close the gap between the two?
Well, I don't think it's going to close the gap, John, because now gasoline prices are going to start going up again. And Javier Blas has a very good column out on the Bloomberg today about how it's the refineries that are causing us the problems at the moment. Now, crude oil going up again, but refinery crack spreads are very wide, and that is keeping gasoline prices high and probably going to send them up again. There's a division at the Fed, but it isn't that wide between those who would like to keep rates where they are and those who think we might need an increase. If inflation keeps going up or starts to resume going up after this month, then you'll see more people in the raising camp. It's more the people like Mickey Bowman who have wanted to cut rates in the past, and Kevin Warsh, who came in with that sort of cut rates mandate, who you might see as farther apart on the spectrum, but nothing that the cutting group can do right now with inflation where it is.
Mike, thank you, buddy. Appreciate it. Looking forward to your coverage as well. A busy week for Mike. CPI tomorrow morning, PPI after that. Lots of Fed speak in between. Lindsey Piegza of Stifel writing the following. There is a clear divide among policymakers, those that remain increasingly focused on tackling now dangerously high inflation and those that remain optimistic price pressures will cool. Rates are likely to remain on hold, at least for some time longer. Lindsey joins us now for more. Lindsey, welcome to the programme. I want to build on the question I asked Mike. You think rates will remain on hold for some time, but would a rebound in energy change that story for you or anyone on the committee?
Well, I do think it's going to be difficult to completely shift some of those more dovish-leaning members into the hawkish camp, even if we do see a resurgence in energy prices and, by extension, then some months of further price appreciation in terms of the headline and core CPI, or more importantly, the PCE. Right now, that camp is very much in the wait-and-see position. They want several months of data, if not more, convincing them that inflation is going to be a long-standing issue to tackle. So right now, there still is a good amount of optimism that while acknowledging inflation is elevated and above that 2% target, that eventually price pressures will cool, potentially into the end of the year, negating the need for a reversal in course. Now, I don't think there is a strong argument right now among Fed officials for cutting rates. But again, there is that very firm position among those more dovish-leaning members to maintain the current pace of policy until we have a better sense of the underlying momentum of the economy.
Well, this is the momentum in the crude market right now. Brent higher by more than 4%. Brent crude to 79, WTI for 74. Maybe the Fed chair chooses to bide his time here. Maybe he waits to see what the outcome is of these task forces. Lindsey, do you see the others coming along for the ride? Is there enough individuals on this committee right now that share the patience that he might have?
I think right now the committee is very much divided. As I mentioned, I do think there is this cohort of Fed officials that are increasingly concerned about now this dangerously elevated level of inflation. We're talking near double the Fed's intended target. But there's also those Fed officials that are able to look through this and say this could be a temporary, or bringing back a favorite word, transitory impact as a result of not only the lingering impact of tariffs, but of course the international conflict that continues to wreak havoc and uncertainty on the marketplace. So I do think it's going to be very difficult to overwhelmingly convince those that are sitting in the middle of the road. And of course, the more that we see this conflict, just like in politics, this is likely to beget gridlock, keeping policy steady for longer, despite the fact that I would like to see them raise rates, despite the fact that I think looking at the current data, this does more than justify a reversal in course. Again, that divide among policymakers is likely to leave us on this steady course, at least for the near term.
Lindsey, let's get into that. You would like them to raise interest rates. Let's sit on that for a moment. Why would you like them to hike? What do you see that the dovish members of the Fed don't?
I think the Fed made a significant policy mistake early on, stopping short of a sufficiently restrictive level the first time around. Remember, inflation back then peaked at 5.6%. And historically, the Fed needs to raise rates, not just above inflation, but often notably above inflation. So stopping at 5.5% really left us with this lingering ingrained level of inflation for years, never getting us back to that point of price stability. Now, the second time around, we see this additional layer of price pressures, and I think the Fed should act with even more force in order to reinstate that level back to 2%, if in fact they do intend to get us back to that price stability level at some point.
When, Lindsey, when do you think they should act?
Oh, I think they should have acted already. In fact, I continue to question the 175 basis points of cuts going into the end of last year, with us still well above that 2% target. Now, there was a lot of optimism that disinflation was well set and we would move towards that level. But I would have liked to have seen the Fed wait until we actually reestablished price stability. So now on the flip side, I think the Fed should have acted and at this point needs to act to a higher interest rate environment in order to quell these dangerously elevated levels of prices and get us back to that price stability.
Above target for 5 years, nothing stable about it. Lindsey, thank you. Appreciate it. Lindsey Piegza there of Stifel thinks this Fed will remain on hold, but ultimately making the argument that they should be hiking interest rates. Let's give you an update on news worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. The US and Iran exchanging fresh strikes over the weekend and issuing conflicting reports on the status of the Strait of Hormuz. Tehran saying the strait is closed, quote, until further notice. US Central Command saying it's open to all vessels and the military is prepared to ensure freedom of navigation. A group of U.S. states led by California is preparing to sue to block Paramount's takeover of Warner Brothers. According to the New York Times, a draft complaint says the deal would stifle competition in the market for blockbuster movies. The World Cup semi-finals are set. England moving on after defeating Norway 2-1. They'll take on the defending champions Argentina, who once again survived, beating Switzerland by 2 goals. Kicking off the final 4 tomorrow will be a European blockbuster. France is taking on Spain. And that is your Bloomberg Brief, John.
Hey, thank you. Thank you very much. Up next, setting you up for the day ahead and a week ahead, plus Lisa sitting down with the Delta Airlines CEO Ed Bastian as the carrier affirms its guidance despite record quarterly fuel costs.
Capital markets are wide open. We had 7 $25 billion offerings this year. That's telling you that there's plenty of capital around. If I'm Kevin Warsh, what I'm thinking about is if I need to slow things down, I have to start attacking the balance sheet. All the liquidity that you're seeing coming out of the credit markets, that's where there's a lot of inflation.
Record IPO, record raise for a foreign company tapping US equity capital markets. Chris Harvey of CIBC. There's been a lot of capital raised in both equity and debt over the last few months. Equity futures this morning negative by 0.4. As we get closer to the opening bell, we're down by 1 full percentage point and change on the Nasdaq 100. Tomorrow morning, packed full of earnings from the banks. In the last few days, we've heard from the airlines. Investors gearing up for the major airlines to report after Delta reaffirmed its full-year profit guidance. The company seeing strong demand despite higher fuel prices. Lisa joins us now from Atlanta with a special guest. Hey, Bramo.
Hey, how's it going, John? I am here in Atlanta at the headquarters of Delta, and I'm here with Ed Bastian, the Chief Executive Officer of Delta, after reporting earnings, overcoming what was a record bill for fuel and still continuing to maintain full-year forecast. You talk about the difficulties of this quarter as well as the resilience of the U.S. consumer. How much momentum is there under the U.S. consumer?
Well, first of all, thank you for coming down. You know, there's not just one consumer in our marketplace, but broadly speaking, I think the consumer's doing well. Certainly the higher end consumer's doing very, very well. That's our consumer base. When you look at what's happening in the market, when you see what's happening in real estate, opportunities for that consumer to invest in themselves, invest in the experience economy. They may not be buying things as much, but they're investing in things they care about for themselves, their families, their friends in the future, and that's travel.
You also talk about the difficulty, and we have seen oil prices inflect a bit higher. How much room do you have to maneuver if this is the new normal, or potentially $80 on Brent crude is the new normal, which we're just up against?
I think we'll do just fine. You know, we look at our business model. Our business model is geared towards a higher end consumer, so our consumer has the ability to sustain this level. In fact, we saw it in the quarter. We made at 9% operating margin with fuel prices much higher than where they are in the existing, the existing landscape. So I think oil is going to stay sticky for longer. I'm not sure it's going to be in crude, though. I think the refined cost or cracked spreads are where you're going to find it's going to take a lot longer for that to come down. All that's going to mean is those brands that bring value to consumers in terms of experience, bring opportunity for people to go and explore, and give them adventure as their means for enjoying life and getting away. And our international travel season is looking very, very healthy. Businesses international, as I just said, American Express, our loyalty programs, our cargo business, we have so many different lines of business, including here in the U.S., our domestic travel. It's all doing very, very well, and I don't see fuel prices deterring that.
You talk about how this has been a sea change in terms of the ability for airlines to catch up with the pace of inflation. Not completely, but enough. You saw a big jump up in airline prices over the quarter. How much further does it have to go to catch up and potentially offset stickier oil prices?
If you look at post-COVID, airfares are about 10 to 15% below where inflation has been. So I think there's still significant room.
So if oil prices go further, you think that airfare prices could go higher without causing just demand destruction?
I think so. We just saw it in the quarter.
Is it going to come across the board or more particularly with the premium cabin?
It's going to be in the premium cabins. When we look at the lower end of the market, the low fare carriers, they're still losing a lot of money. And so while Delta, which sits at the top of the food chain, did very well, we represented 60% of the overall profits for the industry, our estimate in the quarter, despite only having 20% share. It means the other 80% still has a lot of work to do to get caught up, and it's going to happen by being more disciplined in terms of the strategies they deploy, making certain that they can only put out capacity that is profitable, that will return a margin to them.
Do you think that there's going to be more consolidation? Have you been surprised that there hasn't been more during this period of higher prices?
No, I'm not surprised. There's been some in the market, on the lower end. There's been some. Now, I think we're going to be fine. We're going to get through this period of time. Now, if you said that this is going to $4 oil is going to be sustainable for a very long period of time, of course there will be, but not in this marketplace. I don't see oil prices returning back to the peaks we saw a few months ago.
Going forward, you talk about how the premium really is where the revenue driver is, and you recently had the basic business rollout. What prompted a sort of paring back or a more specified product offering at a slightly cheaper price point, but still with the flatbeds?
We've been talking about this for a while. As an airline, we're good about transporting people. We're not necessarily great at merchandising and retail strategies, and we kind of have blunt force instruments. You had your main cabin, you had first class, and not a lot in between. Consumers want different value decisions to take. And if you can give people the opportunity to sit in first class, they may not want different elements. They may not need to go in the lounge. They may not care as much about certain aspects of what the fully bundled first class fare is. Maybe they just care about the seat. And that's actually what consumers care more about than anything is the seat. Well, the other things are nice, but it's the seat and the comfort of the seat that's most important. We can find different ways to bring greater value, to reduce fares at some times, or increase fares in terms of people say, do you want to have the elite services drive you to the club? Do you want extra frequent flyer miles? We can become a much better merchandiser because we're a consumer brand. I think that's been the biggest change we've seen at Delta over the last decade. We're now not just a consumer brand, we're a loved consumer brand, and we can pull this stuff off.
You talk about how there is flexibility to raise prices at the premium. A lot of people are getting in because it is lucrative. We see, for example, even Southwest trying to get into the premium, or JetBlue. Of course, United has made pretty significant inroads. How competitive has this area gotten?
I think that's the strategy. We laid it out. We started this path 15 years ago, and it's not easy. It's easy to say you're going to be it, but it's harder to do. It requires having great reliability, creating a great experience, building trust with your consumers, having the technology, having the corporate market share. Delta's the number one in terms of corporate share in the U.S., and we've been the number one business traveler for the last 15 years in terms of all the surveys. So, those are moats that are going to hard, but there's room for more. I mean, we're only 20% of the overall share in the market, so there's certainly opportunities for more, but it's much easier said than done.
Is there the beginning of pushback on the economy side of things in terms of pricing or just in general? As capacity has come in, as flights have gotten reduced, have you started to see some flyer fatigue in the main cabin?
We had good results in the main cabin. In fact, to your point, we reduced some of the supply in main cabin in the current quarter, given the fact that we were concerned with oil prices, what that meant to fares. But our unit revenue growth in the main cabin was 10% year over year, so it looked pretty healthy.
Do you think that you're going to continue to constrain capacity?
You know, we're going to be disciplined. You know, we've got a strategy, and you know, airlines historically have been, you know, accused of, you know, when times are good they grow fast, only to find out then they bring too much supply, and all of a sudden then fares go down and the airlines are losing money, and it's the up and down the roller coaster. We've been on a strategy path to kind of only put in the marketplace capacity and share that we know is going to be profitable and that consumers are going to value. And so we don't follow the day-to-day. We around the edges, maybe one to 2 points here, 1 to 2 points there, but we're very disciplined. And if you look at our history, you'll see Delta will lead the way.
One issue has been pilots going forward, and I just wonder, from your perspective, do you think you're at a good staffing level currently, or do you still plan to expect expansion of the pilot staff?
We're at a good level. We've been hiring pilots this year. We had a number of changes in the contract that created some difficulties with respect to recovering from interrupted operations as quickly as we'd like to, making progress on that, and we'll continue to make progress.
Ed Bastian, thank you so much for being with us this morning. Ed Bastian, the Chief Executive Officer of Delta, and I do happen to be down here at the same time that England versus Argentina is expected on Wednesday, so maybe I'll just have to extend my trip. John?
Why not, Bramo? I mean, you did Brazil. Might as well stay there and watch the World Cup final, you know? Semi-final, then come back up here and watch the final at the weekend.
YOLO, honestly, you're there?
Bramo's just living it, right?
I mean, I got lucky. I was in Houston and I went to San Antonio Game 5. I think if you're somewhere it's meant to be, you just go.
You think Ed Bastian's got the tickets? You think he's got the in?
Definitely.
Without a doubt.
Yeah, I think so.
Without a doubt. You're not going to see Bramo tomorrow. I hope we see Bramo tomorrow, because coming up tomorrow, we've got this on deck. 5 banks reporting tomorrow morning, followed by CPI in America, followed by testimony from Fed Chair Kevin Warsh shortly after that. What a Tuesday morning we have for you just around the corner. Before we get there, look out for this. Chris Waller, of the Federal Reserve, speaking at the New York Association of Business Economics a little bit later this morning. Look out for that at 12:30 Eastern Time. From New York City this morning, good morning to you all. Thank you very much for choosing Bloomberg TV. This was Bloomberg Surveillance.